थोड़ा बॉलीवुड डायलॉग बोलती हूँ जो सुमित जी ने बोला कि खून एक ऐसी चीज़ है जो हमारे शरीर में कभी कम नहीं होती. So please go ahead and donate for the cause. And now proceeding for the next session. And obviously something that we have been waiting for. And I'm really looking forward for the discussion and the knowledge that is going to come forward. So I please request our dignitaries, CA MP Vijay Kumar, to please join us on the stage. CA Manoj Fadnis, CA Anand Prakash Jangit, I request CA Vasudev Agarwal, Co-Chairman Conference Committee, to please accompany the dignitaries on the stage. CA MP Vijay Kumar. Sir, please. CA Manoj Fadnis. Shri Debajit Roy Chaudhary, if you've joined us here. And CA Anand Prakash Jangit. Yeah. CA Vasudev Agarwal, sir. Vasudev ji. Okay, can you see him? I can't see him. So, not delaying it any further, yeah. I think everyone is so excited that they can't hear their names probably. We are going to have 4 very important topics going forward, and it is all relating to DIA and how digitalization has been affecting our profession and how we can adapt to the change that is coming forward. So we have accounting and auditing and how DIA is affecting it and how we can change, adapt to the changes that are coming forward. We are going to talk about IBC. How can Okay, gentlemen. Sure. So as I was saying, what is going to come forward? One is, the next session is going to be about DIA and accounting and auditing. Post that we are going to listen about IBC and DIA from Mr. Chaudhary. And taxation, how can we not talk about taxation? And as I talk about taxation, and then we are going to talk about forensic accounting and DIA. So these are 4 topics that you've already heard a lot of times, but the new angle to it is DIA and how DIA is actually affecting them. So now I'm going to ask everyone to please take their seats. I would love some attention from you on the stage. I request our past President CA Jinesh S. Banjara and Vice President CA Anup Kumar Banka to please come on the stage and felicitate CA MP Vijay Kumar. Sir, please. And I have the honor of reading all the introductions today. So, Shri MP Vijay Kumar is a chartered accountant in practice and has over 30 years of experience in industry. Yes, please. A very round, loud applause. From 2007, Shri Vijay Kumar is the Chief Financial Officer of SIFI. He had been earlier a partner of Yognant and Ram LLP. Shri Vijay Kumar has been a member of the Central Council of the Institute of Chartered Accountants of India. He is a director of LICI of India, Geojit Financial Services Limited, Heritage Foods Limited, and certain other companies. He is associated with the CII, which is Confederation of Indian Industry, the Institute of Internal Auditors, the Institute of Directors, and certain other reputed organizations. Sir, you really wear a lot of hats. So I'm so glad to have you here with us. And can I now request our past President, Advocate Arvind Agarwal, and Vice President CA P.D. Rungta to please felicitate Mr. Shri Debajit Roy Chaudhary. Our past President, Advocate Arvind Agarwal, please. Shri Debajit Roy Chaudhary is the MD and CEO of National E-Governance Services Limited. Shri Debajit Roy Chaudhary is an MBA from the Faculty of Management Studies and a Certified Associate of Indian Institute of Bankers. Presently, Shri Roy Chaudhary is the MD and CEO of National E-Governance Services Limited. Immediately prior to joining NESL, he was the Chief General Manager in the Insolvency and Bankruptcy Board of India, where he took some path-breaking initiatives like the implementation of business registered valuer and valuation rules. So we are very glad to have you here. We can have another round of applause. I think an event never goes short of claps for you and for us, all of us. So I would now request our past President, K.N. Jain, and Treasurer CA Tarun Gupta to please felicitate CA Anand Prakash Jangit. Ladies and gentlemen, round of applause. Past President K.N. Jain and CA Tarun Gupta, please. I will read the experience of Sir till then. Shri Anand Prakash Jangit is a passionate evangelist for tech-based disruption in audit and finance domain, and he's professionally a chartered accountant and certified information systems auditor. He is the managing partner of AJA, an organization with focus in the area of forensic audit, IS audit, fraud analytics, and blockchain for internal audit function. Shri Jangit has been a part of the risk management team at Goldman Sachs, covering multiple audit across much geography for different functions in the organization. His areas of specializations were forex audit, DP audit, anti-money laundering, Basel II, BCP, and operation risk. I don't even know how people do so much work and experience. So thank you so much. We are waiting for one more guest. By the time he joins, I request CAMP Vijay Kumar to please take forward for your session, sir.
President of the Institute of Chartered Accountants of India and a good friend, Dr. Debashish Mitra. Sincere thanks for taking your time today. In fact, after a long time, I'm listening you. And, personally, I'm a big fan of your body language. When you speak, your whole body speaks. Your body speaks. So, one strong reason why I want to be at the World Congress of Accountants, I want to see your body language communicated to the whole world. So, yeah, we'll all be there. So, it was so nice to listen to you, Dada. And so, President of the ACA, Vivek, and all the managing committee members, senior members of the profession, good friends, Abhijit Bandyopadhyay Dada, Ranjit Agrawal ji, and other members, Ravi Patwa and other members who are here. Extremely happy to be here, and I'm thankful to ACA for the opportunity to participate consecutively in many of your events. I'm extremely thankful to you, and I was just mentioning to Ranjit in the morning that somehow I feel Kolkata is my home. That's the number of opportunities I've got to participate in, whether it's ACA or any of the study circles in Kolkata or the ARC programs here. In fact, even today evening, there's a study circle of Kolkata. One of the study circles wanted me to speak on one of the topics which is close to Abhijit Dada. But unfortunately, due to flight time conflict, I couldn't accept that invite. In fact, before I start speaking on the topic, I'd just like to share for the benefit of all, two people who have immensely contributed right in front of my eyes with reference to some of the initiatives of the Institute. And I think amongst all who are present here, even including the President and Ranjit who just stepped out, the person who has actually witnessed their contribution is myself, and I'd like to share with all of you. Debjot ji, in fact he was in the IBBI, and I'm a huge believer of engagement in any policy drafting or any rule setting process. I always believe it should not be one-sided, there should be a huge engagement. So when the evaluation profession was taking shape and IBBI was given the responsibility, he was in IBBI and he traveled length and breadth of the country, all the 5 regions and some other locations of the institute as well, and many virtual meetings he participated to understand the level of preparedness of the country and the evaluation professionals, and then started bringing out the rules relating to the evaluation profession. And he was a huge support for the institute in terms of formation of the registered valuer organization and consequently the development of valuation profession for the institute. On behalf of the institute, sincere thanks for your huge contribution. Similarly, I would like to also highlight the contribution of Mr. First name Jangid, Anand Jangid. All of you are aware that we have, as an institute, developed forensic standards, forensic accounting standards. We had an active study group of about 20 people who worked almost about 18 months non-stop in development of those forensic accounting standards, and those standards have been approved by the council, currently on a recommendatory mode, and he is one of those members who has very actively contributed to the development of those standards. So some of these people we don't get opportunity to recognize in the public. We take their time, we take their experience, we take all their efforts, but we hardly get the opportunity of sharing it with all. Thank you for that contribution which you have done. So now let me come to the topic per se. Well, the topic is on DIA. It's around digitalization, institutionalization, and artificial intelligence. When this invite came, so I was a little unclear about what is it that I need to share over the 30-40 minutes I've been requested to speak. So if it is around DIA, I was not sure what I would speak on accounting. I think we have had enough programs on impact of digitalization and accounting. So then I was given a clarity that we have a separate post-lunch session where there will be extensive debate on these topics, including artificial intelligence. And the first half of the day, we would have speakers on taxation, IBBI, or rather insolvency, and then on forensic, and one on accounting, which need not necessarily sync with this particular theme of DIA. So that is the guidance I've got. So I'll share my thoughts, keeping this guidance in mind. So let me use this opportunity to share my experiences, my understanding, and the changes which are there, which are now underway as far as the subject of accounting is concerned. And for this, I'd like to begin with the first point, which I would like all of you to ensure a further dissemination within your organizations, both as preparers and as auditors as well. In particular, the 6 years which I've been at the council, almost every interaction which I've had with people, there was this common belief that be it accounting standards or auditing standards, these were meant for preparers and users. Somehow that's the strong belief which many people tend to carry. They think that the standards are meant for preparers of the financial statements. I'd like to make a correction in the understanding of the same. For all the standards, we have a parent document, a mother document, which is called the framework document. In the context of Ind AS, we call it conceptual framework. In the context of accounting standards, we call it framework for preparation and presentation of financial statements. The framework very clearly mentions that the purpose of accounting standards is to help users of financial statements to understand the operating performance and the statement of financial position. The standards are never drafted, and I had the opportunity of getting associated with the international standard setting process also. The standards are never drafted keeping in mind the difficulties of the preparers or difficulties of the auditors. The standards are drafted keeping in mind only the user's interest. So users of financial statement, whether it is investor community, whether it is the banks and other lending community or rating agencies, secondary users, many of them. So the entire standard setting is done keeping in mind, is the information useful to the investors? So when you see a load of disclosures which are there, all of those disclosures are aimed solely at the objective of helping the user community to understand the financial statements. So my sincere request to the people who are present here is, whether as a preparer or as an auditor, when you apply the standards, look at it always from the perspective of how useful this is for the user of financial statement. As a preparer, most of the information looks too familiar to us. I've been with the organization for 3 years, for 5 years, for 7 years. I understand my business well, and all of the information looks so familiar to us that many times we might forget the usefulness of that information to the user. But it's very important that we run our business on capital and the ecosystem which is provided to us by a large user community, both primary and secondary, and hence the financial statements which we produce should be useful to the user community. The second point which I'd like to share with you, which is a very material development, when it comes to the audit standards globally, we have IAASB, of which Abhijit was a member, and which is part of a larger body called IFAC. As far as accounting standards are concerned, we have a global body, which is the International Accounting Standards Board, which resides within the IFRS Foundation. When it comes to corporate reporting, we have seen over a period of time, a need for non-financial reporting, particularly integrated reporting, sustainability reporting. A demand for that has evolved from the investor community over a period of time, and that expectation and demand is only increasing by the day. So the IFRS Foundation has taken a landmark step last year, and ideally, had the pandemic not been there, the IFRS Foundation was supposed to meet in Delhi and announce the constitution of an International Sustainability Standards Board at Delhi, but because of the pandemic, it became a virtual meeting and it got eventually announced from London. So IFRS Foundation now has two separate boards. One board called the International Accounting Standards Board, which issues the standards for financial reporting, and another board which has been set up called International Sustainability Standards Board, which has just started drafting and developing standards. 2 exposure drafts have been issued so far on the sustainability standards. And as far as the IFRS is concerned, we all know that India, we have adopted a converged model which is called Ind AS. And internationally, this particular product, which used to be called IFRS, is now called IFRS Accounting Standards. And the sustainability standards are called IFRS Sustainability Standards. So there is nothing called IFRS now. There's nothing called IFRS now. IFRS brand itself has 2 products. One product is called IFRS Accounting Standards, which is the base for our Ind AS. And other product is IFRS Sustainability Standards. So they've used the same brand for 2 products, one which will be issued by IASB, other which will be issued by International Sustainability Standards Board. So which means going forward, when all of us say Ind AS and Ind AS is converged, it is converged not with IFRS but with IFRS Accounting Standards. So that's a second important development which is there. A third material development, and which will hit the market, most likely from April 2024 in India. April 24 in India is the presentation format of the balance sheet and P&L. So currently all of us are guided by the presentation format of Schedule 3 revised, Schedule 3 which is there for us. But this particular presentation format internationally is undergoing a substantial change, I welcome the presence of our past president, Manoj Fadnis ji. Manoj Fadnis ji, you are one of the speakers. Request you to please join us on the dais. Please join us on the dais. Welcome, sir. I hope you had a good flight. Thank you. So, we have this other material development of better communication in financial reporting, and globally IASB has taken up this project which will hit the road internationally from January 24, and in India in the form of revised Ind AS or a fresh Ind AS coming, which will hit the road most likely in India from April 2024. So this project of better communication in financial reporting has 3 components. First component is what we call primary financial statements, namely balance sheet and P&L. And the P&L will undergo a substantial change compared to the way we all see it. If you look at cash flow statement, currently cash flow statement has 3 components: operating, investing and financing. The income statement also will have something similar, but the terminology, while they've used operating, investing and financing, the definition is not exactly the same as what we have in cash flow. So the revised P&L, which will come in future, will be a much better format of P&L for users to understand, where the P&L will have the following line items. You will have income expense arriving at operating profit. There's a huge debate on whether EBITDA should be recognized as a line item, but internationally they felt EBITDA is prone to a lot of misuse, and the term EBITDA is not getting recognized as a GAAP measure. So people might use it as a non-GAAP measure and provide a reconciliation, but the first level of profit will be operating profit. The next element will be share of profit from associates and joint ventures which are integral in nature. So wherever you have investments in associates or joint ventures, where those entities carry on activity which is an extended part of the parent organization, that share of profit will get added, and then you will have another line item called operating profit, including share from associates and joint venture. This is the second line item which will come in the P&L. The third line item will be add income from other investments which are non-integral and other treasury investments, and then you get a third line item. You will get a next line item called profit before financing and tax. Profit before financing and tax, followed by PBT and then PAT. So this will be a revised format of income statement which is coming. India also, I'm very sure, will follow it once IAS 1 gets replaced by this new standard, which is expected to become mandatory from January 24 globally, and India hopefully from April 24. As part of the same project, there is another element called disclosure initiative. So for better communication in financial reporting, there are three projects, three sub-projects. One was the primary financial statements. Second is disclosure initiatives. So today, if you look at the disclosures which are there in various standards, most of us have started to develop a checklist of disclosures, and we do a disclosure in financial statements which is more a checklist-oriented disclosure. So this standard says 10 items, so give 10 items. This standard says 7 items, give 7 items. But this particular project is revisiting the disclosures in all the standards, and given that these standards are principle-based standards, principles-based standards, even for disclosures, they are bringing out a principle on objective of disclosure. Why is this disclosure required? Why is this disclosure required? And is it material? If it is passing those two tests, then you make a disclosure, which means you will not have a situation where the disclosures in company A, company B, company C will be same 12 items, same 12 items, same 12 items. The disclosures will be very tailor-made, will be highly tailor-made for that particular business organization, and that judgment has to be exercised. So that's another major project which has been taken up as far as the future of financial statements is concerned. The other important component of this project is on management commentary. Currently we have a practice statement internationally on management commentary. So this management commentary is something similar to our MD&A. So what listed companies give it in the form of MD&A, but the objective of the management commentary, which is now under revision, public comments have been given. Our institute has also given its comments. The idea of management commentary is when someone is reading a financial statement, he or she will be able to understand how the performance has happened, how the various items in the financial statements are moved, and there's an explanation of the business strategy and its impact on the operating performance and statement of financial position. So MD&A, if you look at it for what you have in the SEBI LODR, it is a little open document and people explain it the way they want. But with this management commentary, you will find a more principle-based approach towards the MD&A to be given. So how SEBI will subsume it, time will tell, but this is another major development which is happening globally. So the third important development as far as the field of financial reporting is relating to business combinations, goodwill, and impairment. Business combinations, goodwill, and impairment. As far as business combinations are concerned, all businesses have acquisitions, reorganization, which is part of their growth story, So when it comes to business combination, the proposed thinking, the proposed change is that whenever you have a business combination happening, an acquisition happening, you are required to make an explicit statement on the objective of acquisition. So if I acquired an entity A, so what is the objective of acquisition? And you are required to report in subsequent periods with reference to the objective of acquisition, where are you? My objective for acquisition, for example, was to gain market share. Let us say when I acquired, I tell my objective was to increase my market share. So next year when you report, you are required to tell, have you actually achieved your objective of acquisition or are you behind that? So that's another important amendment which is in the works, which will come. That's on business combination. Next, as far as goodwill is concerned, all these three come as one single project, which is business combination, goodwill, and impairment. Now, as far as goodwill is concerned, in the context of IFRS and Ind AS, we all know that we only go through an impairment model. There are many people who argue that the better way of accounting for goodwill is to allow an amortization of the goodwill. So the people who have an argument around that as well. So till about 2004, even internationally, it was only amortization of goodwill. Then they made an amendment and moved towards impairment model. Hardly 15 years have passed by. In fact, it was not even 15 years. Hardly 11 years has passed by before they took up this project, where they started evaluating whether we should go back to the amortization model instead of an impairment model. And particularly geographies like India, there are many people who have a very strong opinion that amortization of goodwill is a much better model than impairment. Now, a very interesting facet is, out of the 14 board members of the International Accounting Standards Board, 8 members were in favor of continuing the impairment model, and 6 of them were in favor of amortization. So there also there is a sharp divide, and 8 and 6 is called as a thin majority. 8 and 6 is called as a thin majority. So that project is going through a further research. But as I see it over the last 2-3 years, there is a strong kind of bias that we should stick towards impairment model. I know there are many people who prefer an amortization model, but personally, my own personal view is that impairment is a better approach for goodwill accounting, because more often than not, when an organization has paid extra consideration, it is paying that extra consideration for an asset whose value is actually accreting in future. As long as you manage that asset well, the value of the asset actually goes up, and it is not a depleting or a depreciating asset. But nevertheless, it's a subject open for debate. But the point I'm trying to tell you in terms of the developments which are happening. So there is this development regarding goodwill amortization as impairment. The third component on this is presentation of goodwill. So when it comes to presentation of goodwill, we currently show it as part of our assets as part of our intangible assets. We show it in the asset side. Now there is this argument that this particular asset is not represented by anything which is underlying, like property, plant and machinery, land, or even a software as an asset. There's nothing underlying which can be felt. So there is a proposal that goodwill should be shown as a deduction from equity. So there is a very strong proposal towards that. Personally, I'm not in favor. Goodwill is an asset for which you actually pay for it with your eyes wide open. The moment you reduce it from equity and reduce your shareholders' funds, you are effectively acknowledging that it's a worthless asset as far as the shareholders is concerned. It is not a right one in my view, but the current draft, the exposure draft which is there for this particular topic, provides that goodwill will be presented as a deduction from equity instead of showing it on the asset side. So this is the third project in terms of developments. This is the third project, which is business combination, goodwill impairment versus amortization and presentation. The fourth point which I'd like to bring to your attention in terms of the developments which are happening are a couple of very important IFRSs which were interim in nature. Both of them, the research is almost complete, and the final standard is likely to come. And one of them is IFRS 14, which is Ind AS 114 on regulatory assets, and another is IFRS 6 relating to exploration. So that standard, which is equivalent of our 106, both of the standards are interim standards. They are not complete standards. So when the IASB issued itself, they issued it saying that for the time being, pending completion of research, let this accounting practice prevail. But once we complete the research, we will replace them. So they have completed the research, and the final document is expected to come in another 2 years. And very happy to share that both the exposure drafts Ranjit Agarwal was the study group convener for both of these exposure drafts when Institute participated in the international standard setting process when I was the chairman, and thank you Ranjit Bhai for your time in development of those two exposure draft comments. The fifth of the developments which I'd like to share with all of you is, again from my experience of interacting with the various stakeholders who are involved in preparation of financial statements. In India, I did try a little, but I wasn't successful. I want to be candid about it. But internationally, they have a very good model where there are investor groups who actively are engaged in standard setting process. As I mentioned as my first observation, standards are meant for providing useful information to the users of financial statements. So if you look at India, the entire standard setting process, we have engagement coming from preparers and auditors. We don't have a good platform where the user groups, whether it is investors or your mutual funds or financial institutions, rating agencies, who actually come and tell us we want this, would come and tell us we want this. In the international context, I had the opportunity of interacting 2 times with the investor groups who come from all over the world, and both occasions was an eye-opener for me. It was a consistent message, but it was reiterating. Both occasions, these investor groups very clearly mentioned that historical financial statements are irrelevant to them. So their strong observation was that whatever historical financial statements you give, financial year 21-22, balance sheet March 22, you publish it in June, July, August, September, their observation is that information is not relevant to them. Not relevant to them. Their expectation is the financial statement should help them get some predictive value. So looking at financial statements, they should be in a position to say that tomorrow is likely to be like this. Their argument is we invest money or we lend money based on how tomorrow it is likely to be. So we should have financial statements which will help us get a view of how that tomorrow will be. I'll give a very personal example. Maybe some of you have heard me on this earlier. So if you take our own personal life, you and I are not interested about how much is the distance between this place and airport. So 25 kilometers, whatever distance. That 25 kilometers historical information is irrelevant for you and me. For you and me, what is important is, if I leave to the airport at 12 o'clock now, will I reach in 40 minutes? If I leave at 3 p.m., will I reach in 35 minutes? So what excites us as user is not the historical information of 25 minutes, but how much time it is likely to take if I leave at 12, if I leave at 3 p.m. So if that is the expectation you and I have in our personal life, just look at investors who put in their hard-earned money or manage that hard-earned money. They also have exactly the same information of how much more predictive value you can add in the financial statements. And let me tell you, as a profession, it's extremely difficult for many of us. Between historical cost and fair value itself, we have struggled, given the kind of estimations and judgments which are there. But if we have to survive as a profession, the product has to be relevant to the user. If the user does not find relevance with our product, you can publish glossy annual reports, put it on your website, do whatever you want. It is not going to help because they are not going to consume the same. We will be relevant as a profession only if we give information which is relevant to the user. So over the next 4-5 years, I would expect lot of discussions and deliberations and evolution around how we can add to our existing financial statements information which will help users to understand how tomorrow is likely to be, What form and shape it will take, time will tell, but the underlying message is extremely relevant, extremely very clear. It's very, very clear that historical information, that generation is over. As standard setters, you have to get ready for how do you provide the predictive value. Around this, let me bring you to one very important amendment which is already proposed by IASB, and it will take shape in India a year from now. Most likely it will become applicable from April 24. In IAS1, all of us are aware about current and non-current, and when it comes to borrowings, we are all aware about a carve-out which we have in the Indian context, where if I have some term borrowings repayable after 5 years, it is non-current. And most of us, when it comes to borrowings, we experience some difficulties in compliance with some covenants, like for example, security creation. I come from industry, and I know many times the bank loan agreement says security has to be created, but there are practical issues on the ground, so security creation gets delayed. And if you look at the 30-page loan agreement, it will always have a clause that any breach, then the bank has a right to call back. So the moment there's a right to call back, it becomes a current liability. So if you look at Ind AS 1, we have made that carve out saying that, look, these things, as long as the bank has not objected, you can continue to show it as non-current, But within the Reserve Bank, and meeting as recent as 3 weeks back, Reserve Bank is very, very clear that this carve-out has to be removed sometime soon, because the hard reality is if there is a breach of covenant, the banks have the right to call back the money. They may decide not to call back, but that right remains, and consequently it's a current liability. So there is that pressure which is building up within India. But park that aside, there is a proposed amendment in IAS 1, and follow this carefully. It will have a substantial impact for most of us. So when you normally take a loan, we agree that we will maintain so-and-so ratios, current ratio, debt equity ratio, EBITDA to this ratio, some 5, 6, 7 ratios we agree to maintain. And when we take a loan, the agreement also provides that for the first 2 years, we will follow this ratio, which is a liberal one, and third year, when the project stabilizes, whatever, the ratio will improve. For example, for the first 2 years, I may agree that debt equity ratio can be 3:1, but by end of third year, your debt equity ratio should come to 2:1, should come to 1.5:1. So if you look at current financial year 22-23, I am complying with the loan agreement, where it allows a debt equity of 3:1. But I have agreed to bring it down to 2:1 2 years from now. So what IAS 1 as amended says is, if your current ratio, currently whatever you have agreed with the banks, this particular ratios of the future are not met by you today. Even though I am required to meet only in future, I should still test whether I am complying today, and in the financial statements, I have to make a disclosure that, future I am supposed to maintain this ratio. As it stands today, I am not complying with it. That particular disclosure has to be made. And this particular disclosure, if many of you thought was harsh, the original amendment of IASB was, the moment you are not complying with even with a future testing date, you are required to classify it as current today. But because of the outcry which came from all the jurisdictions, they said that you need not classify, but at the minimum you have to disclose, saying that, look, we are required to future maintain a debt equity ratio of 2:1. Currently, we are not following it. Had we followed 2:1, this liability we would have been forced to show it as current, because it would be a breach of a covenant and the bank has the right to recall the same. So this is another significant development which is there. But look at it with reference to the previous point I meant on predictive value. So what the users are expecting is, look, today fine, but tell me, are you likely to comply tomorrow? Give me a hint of that so that I will take a conscious decision on whether to participate in the company or not. So that's the other development. And lastly, before I conclude and get the opportunity to listen to others, as far as the non-Ind AS companies are concerned, the accounting standards are currently under revision. The second framework is under revision. And as against 27 standards which you have, 29 minus 2, 27 standards, they'll be replaced by a fresh set of 32 standards. And this fresh set of standards will replace all the existing standards at one go, most likely from 2025 or 26 in a phased manner. As the institute, we have completed the project on about 27 standards, or in fact, 2 days back we approved one more standard. Past president was also there. So 28 standards are cleared. There's work pending on remaining 4 standards, which the institute should complete over the next 1 or 2 years. I would request ACAE to partner the institute in terms of capacity building for this new set of standards, because many of the constituents will be companies who will not be following Ind AS. For those institutions, this revised framework is important. And these revised accounting standards, we have kept 2 things in mind. One, we have brought it closer to Ind AS in terms of recognition, presentation principles, and when it comes to measurement, we have been we wanted to keep it simple, and on disclosures, we have kept it even more simpler. With this broad thinking, we have developed this set of standards which should hit the road sometime in 25 or 26, and I seek the participation of ACA in capacity development and making it a successful implementation. So thank you all for the opportunity to be part of ACA's event again, and look forward to interacting with you in future.
Thank you, sir. I'm still processing what I heard. Sir, we are very glad to have you here. I request our past President CA Anand Chopra to please felicitate CA Manoj Fadnis, please. And a round of applause, please. Can I request CA Neeraj Harodia to please join us on the stage? Shri Manoj Fadnis, he has been the past president of Institute of Chartered Accountants of India. He qualified as a chartered accountant in January 1987. He is also past president of Confederation of Asian and Pacific Accountants. Shri Fadnis was a non-executive director of Insurance and Regulatory Development Authority of India, IRDA, which we commonly know as. Member of the National Direct Taxes Advisory Committee of the Central Board of Advisory Committee. He was a member of the Company Law Committee set up by the Ministry of Corporate Affairs of Government of India in 2015 for the amendments required to the Companies Act 2013. Presently, Shri Fadnis is an independent director on the board of Federal Bank and serves as the chairman of the Audit Committee. Thank you so much, sir. We are very glad to have you here. Now moving forward to our next session, which is by Shri Debjit Roy Chaudhary. Sir, the stage is all yours. We are looking forward to hearing from him DIA in Insolvency and Bankruptcy Code. And what better than sir himself presenting as to what new changes are coming. And obviously we all know NESL is one of the pioneers in bringing changes from information utility point of view in IBC. So sir, all yours. Thank you.
Swati, with your permission, I'll just take about 20 seconds. One material point I'd like to bring to attention of all. In fact, most of the people who are here are associated with companies who are preparing under the Ind AS framework. I see most of you, including the sponsoring organizations following Ind AS. I just want to bring one very important thing to your attention. When you follow Ind AS, we all tend to keep a track of the standards issued by the notified under the Companies Act. We keep a track of the EAC opinions, also about FRRB observations on analysis of or review of financial statements for ensuring our compliance. I just want to draw your attention, keeping the regulatory framework in mind. We all know that for public interest entities, the regulator is NFRA. We are all conscious of that. And if you look at Ind AS 8, when it comes to complying with the standards, we have this hierarchy of gap, where after Ind AS, when it comes to applying the standard, you should look at the parent standards, which is IFRS, and all the literature around that. In IFRS, we are all aware that there is a standard, there is IFRIC. There is also agenda dations. There are also agenda dations, which in a simplistic sense are something similar to our EAC opinions. But they have a higher authority. They have the same authority as IFRS standards. Just to bring to your attention, as of date, there are 287 agenda dations covering various standards and about 30 education materials. So when you are applying Ind AS, you also need to keep a track of those agenda dations and education material. I'll tell you why. Tomorrow, as a regulator, let's say NFRA, ICA, you have applied the standard in a particular way, and there is an agenda dation on the same standard, same paragraph, how it is to be applied. The regulator will get guided by that particular document, because Ind AS is derived out of that, and agenda dation basically is about how that particular paragraph in the standard has to be applied with. So I would encourage all of you within your respective organizations to not only keep a track of Ind AS and related opinions, but also about the agenda dations which are issued by IASB, because Ind AS 8 recognizes the hierarchy, and tomorrow when a serious issue comes, the regulators will lean towards whatever explanation or application guidance which has been given internationally. Apologies for missing out earlier and barging in now, and sorry Debashji for this break.
C. Vivek Agarwal, President of ACAE, CA MP Vijay Kumar. Thank you for your kind words and a very detailed presentation on accounting and auditing. Esteemed dignitaries on the dais and other participants in this annual conference of the ACAE. I'm coming from Bangalore, and as you would be aware, for the last week or so, we are having heavy rainfalls and severe flooding in a few places. Till yesterday, many of my colleagues who had taken refuge in hotels had still to go back to their homes. Because although the flooding had receded, but the electricity, the pipe water was still to be restored. So I am very fortunate that I was spared this mayhem. And of course, I am absolutely delighted to be here today to take this presentation on the IBC. Now, I have been associated with the IBC since its very inception in 2016. At that point of time, I was in the State Bank of India. When the IBC was notified, we had to lay down the systems and procedures for it. In the meantime, RBI brought out the notification regarding initiation of insolvency in respect of 12 large accounts. So I was in the corporate accounts group vertical of State Bank of India. We had 4 very large accounts. So it was the first time we were doing insolvency. So I initiated that process. So typically what happens, I was identified to be a kind of IBC person, and I was deputed to Insolvency and Bankruptcy Board of India, where I spent around 4 years. Those were very difficult times, very initial days. All the regulations had to be drawn. As CA MP Vijay Kumar kindly mentioned, during that time we also introduced the Registered Valuer and Valuation Rules 2017. It's the first time that registered valuers were brought together under a regulatory framework. And the RVO of the Institute of Chartered Accountants of India is one of the largest today, largest number of members. Recently, in fact, I am told that they also, earlier they were only into one asset class, now they are going into all the 3 asset classes. So after IBBI, I moved on to my present role as Managing Director of National E-Governance Services Limited, which is an information utility under the IBC. So I have perspective of IBC from 3 different roles. First, as a bank. Second, as a regulator. And now third, as a service provider under the IBC. The theme of today's conference is on DIA, Digitization, Institutionalization, and Artificial Intelligence. So during my presentation, while I will start with a brief introduction about IBC, I will also cover as to how digitization can help the IBC process. Unfortunately, today IBC has been associated with the usual delays. Various judgments are coming. Time is taking place even in admission of cases. So we have a blueprint as to how to reduce delays. But information utility is not only about IBC. So we also have products which could help the digitization in the Indian economy. In fact, about a year back, I was here in Kolkata. We had discussions at the very highest level in the government of West Bengal. I was in Nabarno. And a few days back, Government of West Bengal has issued the notification for enabling digital document execution. This is a landmark notification. I was explaining to a few members here, like today when you have to buy a physical stamp paper, so those days are gone. The product which is offered in association with the Government of West Bengal is totally digital, paperless. And I will cover this during the course of presentation. Then finally in my presentation, I will also give you a sneak peek into what the future beholds, which I call Vision 2025. Now, before I start my presentation, I would just like to say that IBC, Insolvency and Bankruptcy Code 2016, we have drawn inspiration from insolvency legislation in advanced jurisdictions. But it is not a just copy-paste. We have adapted it to Indian conditions. In fact, there are many components of the IBC which has no parallel. For example, the information utility itself. It is an Indian innovation. It is an Indian innovation. In fact, I was attending a conference, I was speaking at this conference, and a very learned gentleman asked me, this information utility, do you have any models from the developed world? I was kind of, I didn't know how to respond first. Then I said, sir, after 75 years of independence, do you still need the developed world for inspiration? Do we not have our own UPI where we have transactions more than in China? Do we not have our own COVID-19 vaccine which saved so many lives and we had it when we needed it the most? I didn't tell him then. But I kept thinking, ये गुलामी कब खत्म होगा? It's high time. So with this theme, I'll start my presentation, and this is what the Honorable Prime Minister of India had to say on the occasion of our 76th Independence Day celebrations. How long will the world continue to give certificates to us? How long will we live on the certificates of the world? Shall we not set our own standards? So that's what the IBC is about. And let us see how it can impact each one of us. It is not for, the professional. It is everyone can use these tools, and I will try to tell you how. So IBC's theme is from hopeless end to endless hope. In fact, it's called the third generation of reforms. In the first generation, 90s, we know there was a crisis in 1990 and we had to pawn our gold. So that was the end of license Raj. Then we have in the 2000s when free and fair market competition was the theme. Competition Commission of India, SEBI, was empowered. Finally, we have the third generation of reforms, which is to promote exit. Promoting exit is promoting entrepreneurship. Every entrepreneur needs to be told that if his venture does not fail, that yes, there's an honorable exit. So what is the strategy of the IBC? Strong focus on default prevention. Then it envisages a market mechanism. We have all heard of haircuts during the IBC process. During one such conference, I was told, sir, you prescribe that beyond 50%, no haircut. I told him, what if you don't get anything? What will you do then? Can you force anyone? So that is the theme of the IBC. It is market determined. Market has to agree to it. Of course, if you don't agree, the choice is yours. Facilitates creative destruction. So as a part of resolution, anything is permitted. Any kind of amalgamation, restructuring. It promotes resolution over liquidation. Liquidation is breaking up a firm into small individual components. That is not desirable. A valuation of a firm is not just the arithmetic sum of its assets. There is something called enterprise value. And that is destroyed when there is liquidation. So liquidation is not desirable. Finally, IBC promotes entrepreneurship. How? As I said before, every entrepreneur needs to be reassured that if your business fails for whatever reason, then there's an honorable exit. There's nothing wrong in that. Secondly, as I said in the second bullet point, that envisages a market mechanism. You can also make a bid for a firm which is undergoing insolvency. It is an opportunity for you to turn it around. Today we have many successful cases of firms undergoing insolvency and having a total turnaround. These success stories are there. Some of the other highlights are creditors in control. Then we all know of insolvency professional. I was told at the beginning of this conference that many of us are members of insolvency professionals. Information asymmetry. That means the debtor and creditor have the same information. All creditors have the same information. A single insolvency and bankruptcy framework. So there is one single law. That's why it's called a law. That's why it's called a code and not a law. It is time bound. I mean, of course, timelines are now being breached, but let me assure you, some measures are being taken, are being proposed to address this. A defined distribution of recovery proceeds, who will get what, provision to deal with concealment of fraud, and finally, confidence to lenders and investors in debt market. So these are the highlights of the IBC. And there are 4 pillars. Like every institution, IBC has also 4 pillars. And the one I have highlighted is in red is the information utility. Information utility is the IT arm. It's the information technology arm of the IBC. As I had stated earlier, this is a unique innovation. When the code was notified in 2016, it was felt that IBC needs to be different from other advanced jurisdictions. So that's why IU, or information utility, is a unique concept to India alone. Another feature of corporate insolvency is that it can be initiated by one, financial creditors, which are banks, NBFCs. It could be even a private financial creditor. It need not be institutional financial creditor. It could be even a private financial creditor. It could be a supplier, also known as an operational creditor. And indeed, it could even be a corporate debtor. As I stated earlier, an entrepreneur is stuck in an unviable business. This code provides him an opportunity to exit the business in an honorable manner. Now, this is just a listing of cases. The table on the right is very useful. Of all the CIRP stands for Corporate Insolvency Resolution Process. As of now, we have only corporate insolvency. Other areas like individual insolvency have yet to be notified. The left table is just a statistical table, but what is interesting is the table on the right. How have insolvency cases concluded? Firstly, you see 47% are by liquidation. And these are mostly those cases where the company did not have many assets. These cases have been BIFR cases, they have been dragging on for a long time. So insolvency, in fact, released these assets. It brought a finality to all these cases. The second and third is what is interesting. Appeal, review, settled 22% and withdrawn under section 12A. So large components of these insolvency cases are withdrawn, are settled after they are filed. This means that you need not go through the entire process of insolvency resolution. Even before that, a solution can come in. And that is what is happening in a very large majority of cases. Almost 40% of cases, they are being resolved even before conclusion of the cases. So although you do get this news in the press that so much insolvency is dragging on for so many years, but what is often not highlighted is that so many cases get settled. And this settlement happened much earlier. Now, there's another interesting statistic. Now, you're all advisors to corporates, and sometimes you're not able to recover your dues from a large corporate. And somebody tells you that, why don't you initiate corporate insolvency? The thought might come in your mind that, why should I do it? It would be a long-run case. And at the end of it, I may not get anything. But today, if you see the statistic, for example, you see for 2021-22, the largest number of such cases are being filed by operational creditors who are actually suppliers, followed by the financial creditors, out of which many of them are private financial creditors also, which is not just banks, NBFCs, others are also using it. And many of these cases, after being filed, they are resolved. So as advisors, so this could be a tool which we can always consider using. Now, reasons for withdrawal of insolvency cases, most of them we can see are due to settlement with the creditors. Again, the statistics on the right is extremely interesting. It seems most of these cases are withdrawn, 55% of the cases which are withdrawn are less than 1 crore. That is, if it is a small value case, there is a better likelihood of a settlement coming through. So if you or the client you are advising have some issues with the receivables from a large company, medium company, any other company, you can consider this route for recovery or realization of such dues. Because the statistics shown that many of these cases, after initiation of insolvency, the debtor comes and settles the dues. The code in work, so these are facts and these are hard facts. March 2022. The press, we get some of the news which may not seem very good because that's what makes headlines. But if you see, the total resolution up to March 22 was 2.25 trillion. And of course, you may say that it is less than the claims of FCs, which was 6.84. But if you see from the point of view of the liquidation value, it is far more than the liquidation value of 1.31 million. So if the alternate route of liquidation was followed, the realization for creditors would have been far less. And the second bullet point, I think this is the most important part of insolvency resolution process. 18,000 applications were withdrawn and these were valued at more than 5 lakh crore. After filing of the application, but even before initiation. That's why it is often said, best way to use the IBC is best way to use the IBC is not to use it. They have not used it. And still they've got the money. 18,000 applications worth 5 lakh crores. Because once you initiate the application and the debtor feels that there's loss of control, he will come to the negotiating table. It has happened. Facts are there for us to see. Again, this is a very important but less known feature of the IBC, voluntary liquidation, where the assets are more than the liabilities, or there are no liabilities, but an entrepreneur wants to exit the business. So there's a provision called voluntary liquidation. This is filed by the corporate. So there is a quick, reasonably quick way to exit a business for whatever reason. And these numbers, as you see, last 4 years, the numbers have been steadily increasing. So now I've covered about the IBC. The next few slides, I would like to talk about National E-Government Services. This is a public sector company promoted by banks, insurance companies, and it is registered as an information utility. We can call this as an information technology arm of the IBC. So let's see what it does. Default alerts. We all hear about NPA, but IBC default goes back even earlier. It is often said that stress, which is inability to pay debts, can always be addressed better if it is tackled at an early date. So if you are registered as a user on the IU, you will get an alert when there's a default by the corporate to any supplier or to any bank. So it gives you an early warning of stress in any company. Then you will also get an alert where application is filed by another creditor. As of now, you are a creditor. Say you are a supplier. You will not come to know that an application has been initiated for insolvency. So you are a supplier, you will keep on supplying goods. In the meantime, somebody has already initiated insolvency. Whereas, if you are a user on this platform, you will come to know that an application for insolvency has been initiated. How is this beneficial to you? You can be wary about giving further credit. You can take advance payment. You can take various measures to secure your interest. Then you will also get an alert when insolvency starts and the IP gives out a public announcement for submission of claims. Because public announcements come in the newspaper. You are a creditor of the company. You may miss that public announcement. But if you are registered on the platform, you will get an alert by way of email that this company, insolvency has commenced. Please submit your claim. You can also get a credit facility report with the consent of the corporate debtor. You are a supplier. You don't know what the creditworthiness of your buyer, whether he's defaulting to other suppliers. If you're on the platform, you can get access to this report. You can find out what is his payment behavior to other suppliers. You can take a view whether you would like to continue to supply goods to the buyer on credit. Finally, you can also get a record of default from the IU. You can use it for initiating insolvency. Remember, the mere filing of insolvency can make the debtor come to a settlement with you. You need not go through the process. The facts have shown this. So this is the law which which is which provides in respect of information utility. So information utility is a purely electronic repository of information. And only electronic information is submitted. Minimum service quality standards have to be complied with. These are there on the website of the company. Now, a unique feature about the information utility is that it is not a creditor's version of the truth. So a bank submits the information about a company to the information utility. Information utility will not accept as it is. What it will do, it will present the information to the company. The company has an equal opportunity to accept it, or he can also dispute it, and he can give the reasons for the dispute. Finally, access to the IU is as provided to persons authorized in law. So it is not a public credit repository like the MCA. Only persons who are authorized as per law can access the information in the information utility. So in that respect, confidentiality of information in the IU is fully recognized and maintained. So as far as submission of information is concerned, you might wonder, how does the information to the IU come? Where does it come from? So the law makes it mandatory for banks to submit information to the IU. But any person can submit information to the IU. Any person who has a credit relationship and he wants to submit information to the IU, he can submit it. It's electronic, and it is by way of identification. And it's a fairly simple procedure of submitting information. Once you submit information, that information will be submitted to the corporate debtor, and he can accept it, he can also dispute it. Now, one interesting aspect I thought I'll bring to your notice. As you know, the threshold for initiating insolvency is 1 crore. And many of us might be concerned, like, my debt is less than 1 crore, so what can I do? So a special dispensation is there for financial creditors alone, not for operational creditors, not for suppliers. If you are a financial creditor, so even if your debt is less than 1 crore, you can initiate insolvency along with other financial creditors if jointly the debt is more than rupees 1 crore. Recently, the law has been amended that in case you have to initiate insolvency against a company, then submission of information to the information utility is a mandatory requirement. So before submitting an application, submission of information to the information utility is mandatory. Then what happens in case of a default? Suppose a bank, an operational creditor, a supplier reports an information of default. So that information of default is presented to the corporate debtor. The good part of it is that corporate debtor is given an opportunity to give his version of what is the fact. So if he wants to record a dispute, he can. And after he gives response, a record of default is issued, and which is color coded. So if it is green, if he accepts it, it is red if he disputes it, and if he does not respond, even after getting 3 reminders, then it is treated as yellow or deemed to be authenticated. presentation. Can you just check some technical issues? Yeah, it's gone off, I think.
Ticker नहीं चल रहा, आप next कर दीजिए.
So recently there was a judgment of NCLAT which said that if you are to initiate insolvency in respect of a, yeah. Okay, it's here only. Okay, fine. Yeah, so recently there was judgment in NCLAT, which is National Company Appellate Tribunal, which says that if you are initiating insolvency and if you are submitting this record of default from the information utility, you do not need to submit anything else. So that is the only document required for initiating insolvency. We have a large number of members from the Institute of Chartered Accountants of India, and I thought I'll just get one very interesting feature of the IU to your notice. And the law provides the auditor of the company access to the information in the IU. So we have entered into an arrangement with the Institute of Chartered Accountants of India. Free access is provided to the auditor of the company to the information in the IU. So we have recently launched this facility, and we can see this, the launch, promos. So if you are auditor of a company, and as members of the CA fraternity, please do pass this message around that this facility is there for you. You can have an independent view of what is the level of indebtedness of the company. So these are the next big things. As I stated earlier, as of now, we only have corporate insolvency. So next big things are individual insolvency and bankruptcy, cross-border insolvency, and group insolvency. Okay, so till now I had talked about how digitization could help insolvency. This digital document execution is not just for insolvency process, it is for everyone. I had mentioned in the beginning of this, of my talk, that Government of West Bengal has now made the necessary amendments so that stamp paper can be procured in a digital online manner seamlessly by banks. So anytime you have to avail a loan, you can request your bank to make available this facility. So this is a totally paperless, and stamp duty is procured seamlessly through a digital ledger account maintained by the state government. So what are these features? There's an e-sign. So no wet signatures are required. In fact, the pen, as we see, the conventional pen will really lose its utility. You don't require a pen for signature. You can use an Aadhaar e-sign, you can use a digital signature. Stamp is digital, no print is required, paperless, it's efficient, it's quick, it's cost-taking, it can be done in a couple of minutes, and secure storage. So a digital storage is provided in the IU, it can be stored by the bank, and the moment documents are executed, the signed copy is there with you. And the best part is, suppose you are a corporate, you have a number of directors, they are in different parts of the country. They do not have to come to one place. Even the document does not need to go to different places. It can be signed digitally. seamlessly wherever they are. They may be in different cities of India, but through its digital document execution, it can be signed anywhere. Before this conference started, I think some of you mentioned that you're coming from Bangalore. Why don't you do something for the state of West Bengal? So this is now enabled in West Bengal. This is now enabled in West Bengal. Banks, a few banks have started doing it. You can insist on your banks because the government has enabled this provision. So this is the detailed workflow of the DD. I'll not go through this. Now, you might say, what is this theoretical, discussion you are doing on DD? So let me tell you, DD is not theory, it is practice. It is already done. Today, the 3 states are leading from the front as far as digital, and you see the statistics before you. These are the loan numbers which have been done through DD. 3 states are leading. I don't see any reason why the state of West Bengal should not do a catch-up now. And if you see, all kinds of loans can be executed, whether it's vehicle loan, it's personal loan, overdraft. Every kind of loan can be executed through this platform. It can be done seamlessly in a few minutes. I don't see any reason why you should not be doing it. Similarly, this is the loan sanctioned by way of amount. If you see, all corporate loans also are being executed through this platform. SIDBI, Prayas, ECLGS, every kind of loan can be done. Now, this is another product which has recently been launched. Again, this is part of the digitization initiatives of the company in association with the government. This is called electronic bank guarantee. All of us would have seen how a bank guarantee is issued. It is issued on stamp paper. Somebody has to go there and physically give the bank guarantee. So this is again an extension of our DD project. This is fully seamless. It is completely digital. It is tamper-proof. Any document template can be used. Similarly, all the further steps, bank guarantee can be amendment, invocation can be done, closure can be done, every process can be done. And the best part is, you as a beneficiary, you don't have to worry whether the bank guarantee is forged or genuine, because it's available in a digital manner. It is there in a central repository. And the beneficiary, the moment the BG is issued, the beneficiary can immediately download it. As of now, a physical guarantee has to be sent by courier. In the beginning of this conference, a speaker talked about a central repository. So through these BGs, a central repository can be created where all bank guarantees are there. So for both the applicant and the beneficiary, at a glance, he can know what is the kind of liability, what is the status of invocation. So again, EBG has been launched. EBGs have been issued by 2 banks. Other banks also likely to follow. So this is the final part of my presentation, which I spoke about. Yeah, thanks. I'm just finishing. So this is a vision 2025. What do we have in stage? What we have, what we are proposing in 3 years from now, 2025. Today, we know that admission of application takes a lot of time. And we are proposing that this could be seamless, and AI-based software for the preliminary verification and scrutiny of applications at NCLTs, and also a dashboard giving important information about the case for the honorable members to decide on the application and rejection. Again, a central repository would maintain of all applications which are pending. What is their status? What is happening to them? How many hearings have happened? What is the reason for the delay? So that is one vision. Second vision is about OCs. I told you earlier how suppliers have used this very effectively. The idea is to strengthen this even further, because as of now a supplier, if he has to initiate insolvency, he has to produce a number of documents, a statement, affidavit, a certificate from bankers. So what we are proposing is that only one document from the information utility is required for initiating insolvency. Regarding claims management, recently we did a case where there are around 3,000 home buyers. So claims management can be done in a very seamless manner by the insolvency professional. It benefits all the stakeholders, because at a glance you can know what is the status of your claims. When you're filing claims to an insolvency professional as part of insolvency proceedings, as a claimant, you are worried. What happened to my claims? What is the status? How much has been accepted? So this claims management software will give an immediate, a real-time MIS of what is the status of my claim? Where do I stand? I think that's all from my side, and I'm very grateful to the organizers, ACAE, for giving me this opportunity for having this presentation. My contacts are in public domain. You are always encouraged to see our website. Have any issues, any queries, I'll be more than happy to address them during this conference or even later. Thank you so much for your patient hearing.
Thank you so much, sir. That was obviously very, very informative. For our moving on to the next session, can I please request CA Manoj Fadnis to yes, sir, to talk about taxation, DIA, and how they are getting interlinked and impacting each other.
Good afternoon, ladies and gentlemen. Honorable President of Association of Corporate Advisors and Executives, CA Vivek Agarwalji, CA MP Surekaji, Chairman, Annual Conference Committee. Thank you very much for inviting me to this conference. I feel honored and privileged to be standing before this august house. The distinguished speakers in this session, CA MP Vijay Kumar in absentia, Shri Devajyoti Rai Chaudhary, CA Anand Prakash Janged, Shri Vasudev Agrawalji, Honorable Central Council Member of the Institute of Chartered Accountants of India, CA Ranjit Agrawalji, past Council Members Kashi Khandelwalji, Abhijit Bandopadhyay, former Chairman of EIRC, very dear friend CA P. D. Rungtaji, and all distinguished sisters and brothers in the profession. I am grateful to the organizers for giving this opportunity to speak on a subject. And initially I thought it is only on taxation, and then I realized it is a little more than that, and it is talking about the technological impacts in taxation. So as I start with this presentation with a little bit of technology, understanding how the slides are moving ahead, the two things which I believe which has hit all the tax professionals in last 2 years. First, of course, is COVID-19, which has hit all of us, which has changed the world, which has, in fact, today what we say is before COVID and after COVID. So it was earlier BC standing for before Christ, but now it is before COVID. And the world is divided into two segments. The technological updation of all of us has increased dramatically because of COVID. I believe if COVID had not been there, we may not have leapfrogged into using the technology the way we did in last 2 years, the number of webinars, the number of video meetings, and the overall need to travel was reduced. So technology has been used to its maximum hilt because of COVID. And the second thing which has hit all the tax professionals in the last, I would say more than 18 months now, is the notices issued under Section 148, or should it have been under 148A of the Income Tax Act. And this, friends, is also a result of technology. How it is a result of technology is the fact that the department had huge amount of data, and this data was then converted into reliable information. And by the time that information could be used because of COVID, the things got prolonged and the things got delayed. And there have been a lot of complications, be it the Taxation and Other Laws Extensions Act, be it Section 148A of the Income Tax Act, which came into being from 1st of April 2021. And all those things culminated into maybe a kind of a scenario which was impacted by a lot of uncertainties. So when the department, under its bona fide belief, thought that the notices under the old section of 148 could still be issued beyond 1st of April 2021, as provided under the Taxation and Other Laws amendments which took place in 2020, which extended the date of 31st of March 2020 to 31st of March 2021, and later to 30th June 2021. So the department, under a bona fide belief that the date that they had the right to issue notices under 148 even after 1st April. And when some of the assessees went to the high courts and started taking stay orders, and the Honorable High Courts looking into the matter more seriously, I believe somewhere the department threw all its weight behind the issue and issued all the notices in all the cases that it had. And that is where the technology came to the rescue of the department. And finally, what we see in this decision of the Honorable Supreme Court, which is reported today as Ashish Agrawal, Union of India versus Ashish Agrawal. As we know, Honorable Allahabad High Court held in favor of the SSE. Honorable Calcutta High Court in the cases of Bagaria Properties held in the favor of SSEs that the notices could not have been issued under the old section 148. And the Honorable Supreme Court upheld the view of the High Courts, except for one Honorable High Court of Chhattisgarh. All other High Courts came out in favor of the SSE, that notices could not have been issued under section 148 after 1st of April 2021. But what really prevailed on the Honorable Supreme Court is that more than 90,000 cases were at stake. 90,000 cases. So had it been a case of maybe only Ashish Agrawal or Bagaria Properties or one or few more such assessees, the Supreme Court may not have invoked the powers under Article 142 and carried out that historical decision of saying that what is issued under 148 is deemed to have been issued under the new law under 148A. The Honorable Supreme Court was compelled to look at it from an angle that 90,000 cases were at stake. And friends, that is what is the power of technology. The kind of information which was with the Income Tax Department, that data when it was processed into information, and in a short period of time when the department wanted to issue all those notices, it succeeded in issuing 90,000 notices on a pan-India basis. And that is what finally weighed in the minds of the honorable judges of the Supreme Court. And the court observed, as is mentioned, that revenue cannot be made remedialist. and the object and purpose of reassessment proceedings cannot be frustrated. So this is where I feel the technology is going to impact in somewhere in favor of the assessees, and somewhere it is going to create more challenges for the assessees and the tax professionals to look at the matters in a different perspective. I am conscious of the fact that today there is a lot of litigation still going on in respect of the instructions issued by the CBDT pursuant to the decision of the Honorable Supreme Court, and today also it is under a challenge whether assessment year 13-14 could have been reopened, assessment year 14-15 could have been reopened, so on and so forth. But somewhere I have a fear that this last observations of the Honorable Supreme Court is somewhere going to come to the rescue of the department, and if not, the fear is always of a retrospective legislative amendments, and therefore I believe that it's going to be a big challenge for the assessees and the professionals to really contest the reopening on technical grounds. So technology is going to provide a lot of data. Technology is already giving all this data to the department, but what is happening beyond that is the data mining. That data is being processed into information, and logical decisions in accordance with that information are being initiated, and when the department wants it, it can be initiated at any point of time, and it can be initiated at a very short point of time also. And this is what maybe we as professionals dealing with tax matters need to keep in mind about the huge impact which the technology is going to have on the way the tax practice is to build up in times to come. This news item flashed in the Economic Times on 6th September 2022, just a few days back. Online gaming is becoming a source of litigation under the GST laws. Whether the online gaming is a matter of skills from betting or it is a game of chance. And there is a committee which is going to look into these matters to decide what should be the appropriate rate of GST depending on whether it is classified as a game involving intellectual skills or whether it is a game which is going to be a subject matter of only a chance. So online gaming is going to become, the GST law relating to online gaming is also becoming a very interesting area to look into as we move ahead with the implementation of the GST laws. There is a committee which is looking into it. The recommendations of the committee are expected to be brought before the council, before the GST council, and thereafter the council would be taking an appropriate decision in that regard. Now, the reality of life is that all people who are involved in gaming or online gaming would like that the business is classified in a category where the rate of GST is lower for very obvious reasons. And then depending on how the gaming is classified, maybe the parameters or the technological parameters could undergo a change at the end of the gaming companies to see that in one way or the other, it falls into a category where the GST rates are lower so that the consumers are benefited and the revenues are increased for the gaming companies. And therefore, a lot of things, I believe, would then be dependent on the technology as it would evolve, looking at what is the tax laws, and the tax laws in turn will evolve looking at that technology which is there in these gaming, in these online games. So be it direct taxes or indirect taxes, the humongous impact of technology cannot be denied as we move forward. we have been looking at, we have all seen instances where for various reasons in 2020, 2021, various organizations, trade bodies, our professional bodies, and even in some cases the Institute of Chartered Accountants of India approached the Finance Ministry for extending the due dates for various good reasons, that the forms were not available or some changes were being made in the schema and so on and so forth. But today, with technology, the department has been pinpointing and saying that so many thousands of returns have been uploaded, so many thousands of tax audit reports have been uploaded. Exact numbers are available on day-to-day basis. The quantum of revenue which is being collected, the amount of taxes being paid under self-assessment taxes. And this is the information then the department is bringing before the honorable courts when such matters are being challenged. So the data which is available on a real-time basis with the tax department, and we find that the use of dashboards, which is increasing and which is becoming increasingly popular not only with the industries but also with the tax departments, is giving the information in such a easy to understand manner and in a manner in which that information can be put into logical actions, is also something which is going to be a matter of which all of us need to take note of. Then friends, in the good old days we used to say that there are 3 R's which every student should learn, and in the primary schools we were taught reading, writing and arithmetic are the essentials for any student to learn in the primary schools. So 3 R's were reading, writing was pronounced as writing, not as W-R-I-T-I-N-G, writing, and third was arithmetic, which for the third R was arithmetic and not arithmetic. So the 3 R's were the basis for the education of any primary school student, as we learnt in all our younger days. Today the technology has changed and there are different R's. It is repetitive. Technology would say that the things have to be repetitive, it should be scalable, it should be at a faster space. And similarly, there are these 5 I which are impacting the businesses. It is the information, which is the raw data processed into a useful information, useful subject matter, interpretation of that, the integrations, the interrelations, and the 5th I is intensity. So the businesses are said to be affected by these 5 I's, and this is again the power of technology, which is also going to have an impact in relation to the direct taxes and indirect taxes. Before I move further, I would just like to highlight how internationally the technology is impacting the direct taxes, the taxation world as it is. The OECD has brought out huge number of papers, and I saw this right from 2001 to 2018. I could list out the number of papers which were brought out by OECD in relation to what is important for technology and taxation to be kept in mind. And I thought I saw a lot of useful matter in this 2018 paper on tax and digitalization, which was issued a few years ago. Now, what has been happening is this base erosion and profit shifting, which we are all familiar with, is something which has been hitting the global businesses. The multinational companies or multinational enterprises, as they are called in this OECD paper, have this ability to shift their business processes in such a way that the business is said to be carried out at a jurisdiction where the taxation is lower. So it is erosion of the base and shifting of the profits, which has been a matter of concern for all the jurisdictions, because each jurisdiction would like to tax the income which they believe, or that jurisdiction believes is accruing and arising to that enterprise in their jurisdiction. We have Section 5, Section 9 of the Income Tax Act dealing with these matters, income accruing or deemed to accrue or arise in India. Now, OECD has looked into this aspect and came out with 15 action points to be looked into by the countries to ensure or to safeguard their interests, keeping in mind the very prevalent base erosions and profit shiftings, which is something quite natural from an enterprise point of view. A company which is a global company having subsidiaries in different parts of the world is finally looking at, and the stakeholders, as our friend Mr. MP Vijay Kumar also referred to it in his discussion on financial reporting, the stakeholders, the shareholders are looking at what is the consolidated profit which is coming into the company ultimately after consolidating all its subsidiaries, and tax becomes an important expenditure component in arriving at that net profit. And therefore, any multinational enterprise would like to optimize its tax in such a way that the outflow is reduced to whatever is minimum possible within the framework of law. And on the other side, the jurisdictions, the sovereign jurisdictions would like to ensure that the tax due to them or the revenue due to them should be received in accordance with what is the business activity which is being carried out in their jurisdiction. So the hallmark of this 15 action points which have been identified and the recommendations which are structured on these three key pillars is finally to see that there is transparency in the jurisdictions, and that transparency is achieved more with the help of technology. So the tax rules relating to BEPS as they evolve in different jurisdictions are required to be based on principles which could be on to ensure that the activity which is being carried out in the jurisdiction is taxed, and there are transparent rules for that, and there are consistent rules for that. And technology is going to play a very important aspect in this area insofar as the taxation for multinational enterprises is going to be affected. And we see that the developments which are happening in the field of international taxation would be generally be guided by what is being discussed and decided under the forum of OECD. This paper also identified three major aspects of business models which are highly digitized. So companies which are using technology more, or let's say which are not the brick and mortar companies but which are the new age companies, there are three important aspects which have been noticed with respect to the business models of such companies. One is cross-jurisdiction scales without mass. So the paper says that these multinational enterprises, which are highly digitized, have an ability to enter into the economic life in a jurisdiction without creating physical mass or sustainable physical scale of mass in that jurisdiction. So this is one feature which has been identified. Second is there is a high reliance on intangible assets. So be it the intangible assets, networks, contents generated by users, the data of the users. These are assets which are highly leveraged insofar as the high digitized enterprises are concerned. And the third is the data and the contributions made by these companies in terms of the contributions made by the users of the services of those companies is a third aspect which distinguishes these highly digitized global companies. And therefore, keeping in mind the principles of transparencies and keeping in mind the principles with respect to taxing what really accrues and arises in that country, which in turn is going to be leveraged on the basis of technological developments, because they will have to showcase what is happening where, what activities are happening where. And that is the future in way the tax laws for the international taxations of companies involved in cross jurisdictions would really depend on. Just a few days back, maybe a week or two weeks back, the Ministry of Corporate Affairs has issued a circular, as most of you would have seen that companies which are the global companies which have their accounting information based on servers. So there is now a requirement to ensure that those servers are physically available in India. And this circular, to my mind, came in the last week of August, without giving any timelines for which it could be achieved. The way the circular is worded would mean that that circular gets implemented immediately, because there are no timelines mentioned for giving a time period within which it could be implemented. And I'm sure, basis some representations which will take place in this regard, there would be some timelines given to the companies to ensure that the servers are physically kept in India. But the important point is the location of servers has rightly been identified as a critical part in terms of the information. So that tomorrow it should not happen that at the last minute, when you are talking about the digital companies and not the brick and mortar companies, the information said to be available on the server and the server is not available physically in the country, that information may not be available to the government and regulators for various objectives which those departments could have, the government could have, including very important with respect to the tax or the revenue which the government wants to collect from those companies. So we are moving in a direction where with this notification being brought in, and I remember this was one matter which was being discussed way back since the time Companies Act 2013 was implemented, as a part of a committee which went into some of the recommendations for the changes in the company laws. This was also one of the aspects which was brought out, that should it be necessitated that the servers should be located in India. And I remember for a long period of time the industry had been insisting that please don't make it compulsory. This would affect the business of companies which are genuinely in doing business. I mean, they don't have any objective of running away from India. But if it is a multi-locational, multinational company, the information could be available on a server stored in a different location. Today, unfortunately, India is not recognized as a country which is low wages country. The wages in many of these cities in India, which are like Bangalore and Gurgaon, as is mentioned, are comparable with the global wages, or maybe even higher than the global wages. And there are countries like Philippines, countries like Vietnam, countries like Bangladesh, which are fast competing with the Indian companies in respect of taking away the BPO opportunities which come to this part of the world. So the movement towards the technological movement, as we see, is to insist on the entire information being available within the country. Now, before we had the kind of digitization which we have today, as we are aware, there were various difficulties with the tax authorities, and the time that it took for processing of the information, the time that it took for processing of the refunds. It was as if things were being looked at in a silos. Each commissioner of income tax would look at the collections which are there in his particular commissionerate. I recall a day, an incident, when a commissioner of income tax approached a particular bank and said that you have a lot of disputes which are there with the department. Your disputes are today lying at ITAT or high courts. On these matters, in the month of March, you deposit that, you pay that under protest to the department. We pay you interest in any case. In the first week of April, I'll ensure the Commissioner Appeals will decide the matters, and obviously the decision will be in your favor. By April end, I will see that the refunds come to you. So very appropriately, to ensure that his targets are met in the month of March, the collections were done in the March, and in April the refunds were issued as promised along with the interest. Bank is happy. Bank is ultimately in the business of making money through interest. So bank has nothing to lose. It paid the money in March. It got the refund in April. Unfortunately, the commissioner got transferred in the month of May, and the next commissioner came in and said, see, you are starting my year with a big hole. Whatever is my collections for this year, I have started with this as a negative figure, and now I am going to insist for a higher amount of collection towards the end of March from you. So each one looked at his own silos. But today we see that things have changed dramatically. And why things have changed is because the information is being processed. The information is being processed in a different manner, in a centralized manner. The finance ministry is looking at, okay, what is the total outflow as interest at the end of the year? And if this interest can be saved, this is an expenditure saved, and any penny saved is a penny earned. And therefore, the whole thought process has changed when the information is available in the department centrally and on a real-time basis. So today we hear cases, instances of refunds being granted immediately. I don't know if it is true, but I was being told that there are instances where somebody came to the office of a chartered accountant to file his return. By the time he went out having filed the return, he got his refund also. He came back excited to meet the chartered accountant, and the chartered accountant thought, why this person has come in at the last minute again? I have just filed his return. I can't process his revised return today if he wants to. And the client is so happy to say, I have already got my refund along with interest. So that is the speed of the information at which the returns have been processed. Indian Income Tax Department, we need to be proud of the fact that there have been glitches, more particularly last year. There was a portal which was to come up, a promised portal which would change things. Unfortunately, in the beginning, we thought it has changed things in a negative manner. We were happy with the manner in which the earlier portal was functioning. And from 1st of June to 7th of June 2021, we were told the income tax portal would not function because it is being upgraded. And I did not narrate what really happened for the ensuing months, where neither the earlier portal was available nor the new portal was functional, and more than the assessees, the tax professionals were put to a lot of difficulties. Applications filed disappeared from the portal, and consequently whatever happened did really trouble all of us. Having said that, it also needs to be taken note of the fact that in any kind of technological migrations, these are teething problems which are bound to happen. If these teething problems are within a closed corporate type of a sector, it's not really, it is something which everyone is used to and it happens. But when it has a public dimension and there's a public uproar, then it is a public outcry which really has a wider impact on the issue than what the real issue is all about. And within a few months, the portal did stabilize, the information did come back, and some problems have continued even are there till today. But the fact remains that today the income tax portal or the GST portals, the kind of technology which has been used is one of the very fine technologies and which is giving very good results which is there. Things are bound to improve in future. We are talking about today e-filings, paperless filings. We are talking about faceless assessments. many of us have problems with faceless assessments. And some of the assessments which took place in a faceless regime have been struck down by the Honorable Court, saying that you have not even followed the principles of natural justice. You have not even followed the instructions which have been issued by the CBDT. And you have raised demands which are atrocious. One of the cases which all of us read a month ago or maybe 2 months ago from Honorable Allahabad High Court, where a 148 notice was issued, an assessment was framed on 31st of March 2022, and the assessee was said to have deposited more than 10 crores of rupees in his bank account in cash. And the assessee had replied to the department, this is incorrect information with you. I have not deposited this amount of cash. But, yeah. 5 minutes? Okay. Sure. So, we have situations where, in that particular case, the Honorable Allahabad High Court not only struck down that assessment, but has imposed an exemplary penalty of 50 lakhs of rupees on the assessing officers and the department, which is still under process as we understand. So these are certain matters at this forum we need to appreciate that these are part of the teething problems. The public perception is different, but when the elite tax professionals sit in an august house and discuss the technological impacts, so these are things which are happening, which should not have happened, and which should have best been avoided. But possibly that assessing officer did not get that information on his, what he saw on his system, that particular information may have appeared in a different manner. So be that as may, the fact is our technological developments have been very far superior. Let me touch upon a few matters before I close. Is some matters, as I was told, to look at it from the point of view of what SMPs should be doing in this kind of a era. I believe there is a lot of digitization which has happened in the government. But to that extent, most of the enterprises have not really used the digitization to that extent. Some companies having SAP, ERPs, are still not using the capabilities available in a much more efficient manner than what it is being used today. And these are some of the areas where I believe today what is happening is we look at financial audit, we look at tax audit as different things. I wonder why. Some of the information which is required in the tax audit report can be very easily integrated in the financial, in the way the information is captured at the source. So clauses like 34A of tax audit report, which takes so much of time today for us to identify the areas where the tax ought to have been deducted and not deducted and report that under 34A, or that clause 44, which thankfully the council has given us a guidance note and has given us that disclaimer note, and which is what I believe majority of the tax audit reports will have that clause integrated. But the reality is that technology can be used in a very efficient manner, that all this information is captured at the time of data collection, and then whatever reports are required under the different statutes can be generated. And we also need to take cognizance of the fact that some of the information which we are auditing today, we are not really competent to do it, or put it in a different way. Technology is more competent to give that information to the department than we as tax auditors. And one of the classic examples is whether the payment has been made in cash for an amount exceeding 10,000 rupees. Now today the banks can compile the information and give it on in a simple platform to the department, PAN-wise, SSE-wise, date-wise, how much cash has been paid, how much payments have been made by otherwise than by an account pay check or those online transactions, than what any tax auditors could do. And we have been only giving a disclaimer in that regard. So let me just conclude because of paucity of time. Let me finally refer to this document. And I wish our friend MPV was present at this point of time, because Uh, Ranjit Bhai, I think, has just left the hall. One of the wonderful documents which the Institute has brought out is, this is Digital Competency Maturity Model. I would urge all the tax professionals and all chartered accountants to look at this model. This is downloadable on our website, Institute's website. It only says, look at what is the maturity of your organization. Look at whatever is the size of the clients and size of the practice. And then look at this document and evaluate to what extent the firm is matured in the digital world. And it gives 3 levels. So, if you are at level 1, you know what more you need to do to go to the next level. And if you are at level 2, you still need to go to the next higher level. You need to know what more you need to be doing. It is not just a matter of taking new softwares and new audit tools. Ranjit Bhai, I was just mentioning, this is one of the very fine documents which the council has brought out. And I remember MPV was the chairman of this Digital Assurance and Accounting and Assurance Board. I would urge all members to download this and look at the maturity of our firms with respect to our other peers. And that is the only way we need to see what are the gaps which are there today and where we need to plug in those gaps to go to the higher level. Thank you very much for this opportunity, and thanks to all of you for your kind listening. Thank you.
Thank you so much, sir. Quickly moving on to our next session, and it is a very, very interesting session, and post that we will be breaking for lunch. So our next session is by CA Anand Prakash Jangat. He is going to talk about DIA and forensic audit, and we all know when it comes to forensic auditing, how important artificial intelligence and digitization is. So sir, all yours. Ticker? Yeah. Yeah. Ticker चाहिए वो change वाला. हाँ. While sir is getting ready, do note down if you have any questions. Before lunch, we'll also be doing a quick question and answers round for maybe about 5 minutes or so. So if you have any questions from any of our speakers, we would love to answer that. Sir, all yours.
Yeah. Okay, very good afternoon, everyone. And it's a great session I've been actually hearing, and a lot of ideas which are coming to us when we are actually discussing, because digitization, and if you see, the DIA, we call it DIA. I will actually end it up to something on DIY. Have you heard about this term DIY? Do it yourself, right? Have you heard about that? Can you make it F5, please? Okay, that's the thing. So I actually thought, what should be the way I should be talking about? So I just thought, let me give a kind of a topic which makes real sense. I have one request. Can I have the lights like a little bit of brightened up? It's a little gloomy, right? And I am between you and your lunch, right? Okay, so can you give me 40 minutes? I have 40 minutes, so I just keep that short and simple and try to talk about that. So my topic, friends, I'm going to talk about is building the Skynet for forensic accounting. Now, how many of you know Skynet? Raise your hand. No one knows Skynet? Come on. No one has seen the Terminator series? The movie Terminator? How many of you have seen the movie Terminator? Arnold Schwarzenegger? Come on. So you should tell me, what is Skynet? You don't think Skynet can be built? Actually, why I kept this topic is because I am in Kolkata, okay? And when yesterday I came from Bangalore, I actually carried with me one of the suites. Like I was meeting one of my ex-friend from Aditya Birla, who was, my first job was Aditya Birla at Kamak Street. So he's right now in, ITC, and I was meeting him up. So I bought for him a pack of an item from Bangalore called Mysore Pak. I don't know if you heard about that. Now, if you heard about Mysore Pak, I brought it up, but it's an irony. You know why? I gave it to him, and he was, as a good friend, he said, thank you, great, and all thing. And then I scratched my head that, what am I doing? I am bringing one useless sweet item from south of India to a sweet capital of India. Like when I'm going back, I'll be actually packing some 5 kg of baked rasgullas and all the thing. That is my plan of action. So it's actually foolishness on me to do that. Now, same way, you should be knowing about one interesting thing, okay? Let me see this thing, and I don't know how many of you know this. Anyone recognize any of these people out here? Come on, like Kolkata, you should be ashamed of yourself if you don't know them. Think. In fact, yesterday I went there and got myself a photograph done. Anything? Anyone knows what this picture is all about? No? This is a picture of the first computer built and installed in India in Indian Statistical Institute in Kolkata. Okay? So you guys were the pioneer in computing from, anyway, which year is this? 1953. That was the first time this was actually built in Indian Statistical Institution. And ISI still is one of the amazing body which is doing a lot of areas work on the artificial intelligence, especially on machine learning part out there. Now why I showed you this one is, when we are talking about this topic for today, which we call it up building the Skynet, let's try to understand what is changing around us. Forensic accounting, and today MPV sir also talk about something called as FAIS standards, and I'm sure you have gone to our institute website and seen it up. Anyone got a chance to read FAIS 410? That is actually on data analytics. And there we are talking about how data science, machine learning, artificial intelligence is going to transform the whole concept of forensic accounting. And today you heard, Devajit sir who was talking about NESL. Think of that, we have access to so much of data. Are we using that data which is generated in a right way? It need not be used in a way what we see as just some analytics and all things, but there is a kind of a concept which is coming of using that technology for the right purpose out there. And that's something which we need to understand and use it up. I will also try to see if I can show you one actual use case which is there. And I have to just access my machine for a second and I'll just show you. But the idea is, in the world of forensic, we have all know one term, prevention is better than cure or not. So do we want to have a kind of a preventive control, which is, you have heard this term, we used to all have forensic accounting engagements which are like post a fraud happened. But can you get to do something called as an continuous control monitoring? Now, this was not possible if you ask me 5 years back. There were many reasons why it was not possible. But today we are in a situation where the digitization and artificial intelligence, this part is allowing us to basically use all that thing which is out there for us. And if I tell you, you'll be actually shocked to know one thing. You go to one site called h2o.ai. If you go to the site, you'll be shocked to know that the algorithm which are used for machine learning is being given free of cost. They don't charge a money to you. Only thing you have to do is upload the data, run your thing, and take care of that. Now, h2o.ai. Now, why I'm trying to tell you this is, remember a time, as mostly chartered accountant, I always ask this question because it's something very close to my heart. When first time MCA 21 happened, and we came to know something about digital signature. How many of you used to think digital signature is, I sign and scan, that is digital signature? Honestly, I used to think that way. No one else used to think. I was the only fool in the room. Everyone used to think or not. Come on, be honest. Huh? Anyone wants to write CA examination again? No one, right? Come on, everyone like yes. मतलब किसी को भी है कि मतलब वापस CA examination लिखना है, थोड़ा मार्क्स कम आया था, बहुत कम आया था. सर किसी को नहीं लिखना है, CA एक बार लिख दिया बस हो गया. But the point which I'm trying to bring out here is, you need to understand कि when we see any technology for the first time, it will look like कि ये पता नहीं क्या है, कोई हवा है कि like this is something which is there. But today, the number of digital signatures document we are using is extensively high or not. Day in, day out, we are using it. मतलब our bonded labels are using it. Everyone use it. Now the point which is there is, in that kind of situation, don't you think this is going to be, AI is not going to be something, different that. It's a kind of a set of technology which we need to understand. And today we are in a world which we call it a commoditization of technology, which basically means it is no more if I have to do something, I need to go and learn that programming language and all the thing. Anyone has heard about a term called low code, no code? No? You should search, yeah, that's the thing. It's a word you should search, low code, no code, which basically means I don't want to learn all this programming and all the thing. I want to just do a drag and drop and just have my things done. And there are tools which are doing it up. So let's try to understand in forensic accounting, what are the things which are changing? What are the use cases which are people are using it up? And the third, which is more important, DIY, which is you have to do it yourself also. Try to go back in your organization, see. In your engagements you are doing it, try it up. I'll be telling you the tools and other things, and I'll just tell you that please try to work on that, because forensic is not going to be any more same. The post facto things are over. Post factos are going to remain, but they are not going to be the main things which are driving it up. It's going to be trying to predict if there is a fraud happening in the organization or not. And that is something which is interesting. And I'll just tell you something. I'm just quoting a kind of a media report which I saw, and you should go and check it out. One of the big four is actually said that we are going to spend $5 billion by 2025 only on audit automation. And this is not something, you can just go to news.google.com, search for that. Why I'm trying to tell you is why organizations are investing into this. Gone are the days where we can actually play with that. I remember when I was doing my articleship, whenever I did it in a small and medium firm in Bangalore, and whenever my boss was angry with me, he will say, ye audit 100% vouching hai. So 100% vouching used to be what? Punishment. Hota tha, matlab, like how many of you had heard about this concept called third year syndrome? Third year articleship mein aate kya hota hai? You start thinking you know more than the boss. Boss is useless. मैं ही चला रहा हूँ office को. And सबके साथ होता है. Like anyone who says उनके साथ नहीं हुआ, they are just lying. So मेरा भी वो third year articleship में आ गया था. मतलब अरे मैं ही चला रहा हूँ. Boss तो ऐसे ही है कुछ मतलब बैठे हुए ऐसे. So एक बार boss ने बोला ठीक है अब इस बार है ना 100% vouching. That used to be the punishment. But I am telling you today, the concept of the technology which is available, you can actually boil the ocean. I'm using the word boil the ocean. Ki 100% vouching is like not an option. You should be doing it up. And it's not like you do it, it's the machines which are doing it up there. And it's not like something which is going to cost you a bomb. It is going to be like less than official stipend, 1 month stipend of one article. At that price, can you do it? Now that is nothing, right? That's what we need to be understanding it up. Okay? So, okay, it's not working. Okay. Now this is a statement which I really like, and there is one more thing which I heard. I was taking a session at Indian Institute of Petroleum Management in Gurgaon. It's an IOC owned body. If you go there, on the back of the reception there is a huge mural, and they have put on that change ... before you are forced to change. And that's a very powerful statement. Change before you are forced to change. And that's the place where most of their leadership trainings and other things happens. Now, here is one statement by John F. Kennedy, which he always says that change is going to happen. It's the way of life. If you the way 20 years back we were doing our reviews or 10 years back, it's not going to change it up. Anyone here wants to go back to Nokia 51100? Remember that snake game was so fun? और उसको तोड़ने पे तोड़ भी नहीं सकते थे, मतलब किसी कहीं भी करो कुछ नहीं होगा उसका. We have come a long way from that. No one is going to go back to that thing. So why on our forensic engagement and our practices which you are doing it up? Now Skynet, if you don't know Skynet, this is an assignment, go back home and watch Terminator series. Whole of the things, it's there on Amazon Prime right now, and it's an interesting series. And there was a kind of a Skynet which was nothing but a neural network based artificial intelligence, which is said that humans are the problem for this earth. So eliminate all the humans, no problem, world is going to be a nice place. But jokes apart, there is a very interesting analogy in this area. We have today, I'll tell you one thing. If I tell, how many of you are here having iPhone 10 and above? Anyone? How many of you are having it up? Okay, mark these people, they are rich people. Okay, if you are having iPhone 10 and above, your computing power is more than my laptop computing power right now. Now, that was never the way out. What has happened is, the way advancement happened in technology, last 5 to 7 years, we have a very high-end systems available at a fraction of price what you can think of. Now, this is one interesting global CFO survey which was done by PwC, and I just thought I'll take one set of the report or analysis which they gave. Can you see what they are saying, that the present technology which organizations are using maximum is on what area? It's actually automation, RPA and other things. But as per them, in 2 to 5 years, can you see around 50% of the technology focus of organization is going to be on basic and intermediate AI. And I'll actually explain you where they are using it, and you can get an idea about how we can use it up also. Second, in next 3 to 5 years, can you see the automation part is the smallest one, and the biggest thing is on advanced AIs and other things. What about predicting bad debts? What about predicting NPAs? Think of that. If you are seeing Basel III norms also, they said you need to use, it's actually written out there in Basel III norms, you have to use AI in credit management. You can go and check it out there. It's actually kind of a part and parcel of a kind of a, the norms which are there. Now, how is this whole thing helping audits? It's helping us because it has something which is very interesting called predictive value. In forensic, anyone who has gone through, have you heard about something called Benford theorem? It's a basic thing we are taught when we go into forensic. If you want to know the data is natural or artificial, apply Benford theorem. Anyone has seen a movie called The Accountant? Huh? In the show, you guys are not watching movies. In that they show him using Benford theorem to basically find out fraud. And that's actually true because that's a kind of a basic fundamental. But Benford theorem or Benford law is a very long-term thing. We are in there also, you are using a lot of statistics, a lot of predictive models. Do you remember something called linear regression we learned in statistics? We used to put all the different values on a straight line and we'll pass the line through, the dots which are there. And whichever mark is the far away from the line, that used to be called as anomaly detection. And that is the new forensic use case people are using it. Anomaly detection. Try to find out anomalies, because all transactions which are happening, there will be some transaction which is not fixing it up to that. And as auditors, don't you think one of the very interesting thing is that we are very good in analyzing data, seeing it up, patterns and other things. And that exactly is coming it up there. Now, the genesis of the forensic is coming from, I'm sure all of you have heard this term multiple times, Industry 4.0. They are talking about something called as, we are in the fourth industrial revolution. You all have heard about this industrial revolution somewhere? I would highly recommend you to go to one site of World Economic Forum, because they are the people who are promulgating this one like anything. And they said we have entered our fourth industrial revolution. First industrial revolution, steam engines. Second industrial revolution, if you remember the time of, have you seen this movie, Modern Times by Charlie Chaplin, where he goes into the machines, comes out. That came in 1934, which was like kind of peak of second industrial revolution on industrialization and what we call as using of electricity. Third industrial revolution, computers. We see the change around us. And I was attending one very interesting session at Bombay Chartered Accounting Society by, there was a talk by, Deloitte's CEO on future of audit. And he gave a very interesting example. He said, if you take two industries, computers, automobile, and represented by one company, like automobile by Volkswagen, computers by IBM, the amount of advancement which has happened in this third industrial revolution, if the same would have happened in automobile industries, a car will require 1 liter of petrol to go around the world, and it will not require any kind of maintenance all its life. But did that happen in the cars? No. But have you seen, I see a lot of senior members, computers of 15 years back, what they were and what we see today. Don't you think there's a drastic change? How many of you have taken shower before entering computer room? Not shower? Have you removed your chappals and shoes? We have all done it. You see, from that time, we have come a long way, guys. So you need to understand. And the fourth industrial revolution, as per, I'm not telling it, is as per World Economic Forum, they said we have entered into that where you have cyber physical system, IoTs, Internet of Things. Like, I'll just tell you one very interesting thing. Earlier, we used to have a big issues in valuing work in progress or, products which are in pipeline. Because there are big silos where some items will be there and all things, you don't know what is happening out there. That time we used to have something called SCADA system. I don't know if anyone has used it. Today we have IoT system, Internet of Things. They will tell you that, okay, in this silo you have so much of raw material. In this silo you have so much of raw material. So that we can get a good valuation of our inventory, which never used to happen at one point of time. Now this genesis leads to something which is called, we call it Audit 4.0. And this is, again guys, this is a Yale University paper. You can actually go and search for that. Search on the, Google, Audit 4.0. So there is a thesis paper written by one of the researcher from Yale University, very interesting. He talks about this whole concept of mirror world. That gone are the days. Tell me one thing. Does it happen that we had just now, they were just talking about this corporate debtors data and all that kind of thing. If I have a debit, there should be somewhere credit would be there. We know this fundamental. Always when I was doing my articleship, personally I wanted to know one information. And I'm sure all of you wanted to know that information also when you were doing articleship. What was that information? Sorry? Audit fees that you will come to know. So personally I wanted to know only two information. First, whether the client is giving conveyance and food. Second, be honest, huh? Like, we like all show off, like I know, like, oh, we are rich CAs and all things, we don't worry about that, but articleship time, whatever everyone does that. Second thing, which personally I used to want to know is, what is the CFO salary? Be honest. क्योंकि आर्टिकलशिप टाइम में ये लगता था ना कि एक दिन हम भी बनेंगे CFO, हमारा सैलरी क्या होगा, and then used to feel like, oh my God, इसको इतना दे रहे हैं, इतना तो काम करता ही नहीं है. Then used to have all this kind of feeling. I'm just telling you honest thing. Now, when I was doing my articleship, there was one client, I'll not name it, a large conglomerate, and we were actually doing whole of South India plant reviews. So सब plant में गए तो first thing मारते थे payroll data दीजिए सर. फिर अरे इसको इतना मिल रहा है. We used to have like our own bitching about all the things. Now, what happened is when we went to Chennai for this client, CFO at the Chennai plant was little strict. He said, no, this is confidential data. We'll give it to your partner, not to you. I said, no, we require it up. He said, no, I'll talk to your partner. Okay. So I told him, sir, then I'll do one thing. Can I start all the compliance testing? He said, yeah, compliance you test. So I started with PFI and ESI. So if I have PF and ESI data, do I have the data what I want out there? Agree? Now, exactly that is the thing which happens. We are living in a mirror world. If you are seeing that there is some data out here, it will be external data which is also going to be there. And this information, friends, can we use it up? So, in Audit 4.0, Audit 4.0 is going to be more of a business service. This is how they are imagining it up. Organization will have their ERP. There will be data service providers, and there will be an external way of looking at all of the things. And these things are the way we see future happening out there. Now, in this future, friends, it becomes also very important to understand our role out here. How many of you have seen a self-driving car? Like, you have heard about this Tesla? It's a self-driving car. As per Industry 4.0, we call them a cyber physical system. What is a cyber physical system? It's a physical car. When it is running as self-driving car, who controls the steering and acceleration and everything? Brakes. It is not a human who is controlling it up. A machine is controlling it, which is on the cyber thing. If you are trying to use Siri, Siri is a cyber physical system. It is actually on your phone, but your Siri is different than my Siri, right? Like, we are not saying our Siri is that, but it's different. It's every person based on your users which is there. Now, similarly, how many of you heard about this medical predictions of cancerous tumors and other things? They are using it up in predicting it up there. And how do they do that? That's the most interesting. They use a concept called machine learning. What is this whole concept of machine learning, which I'm going to explain it to you right now in terms of what's the new age tech which is being used in forensic accounting and how it's changing the way we look at things. Anyone here has done any kind of programming at any point of time? Someone? No one? You remember we used to have COBOL in our institute. COBOL basic used to be there. A lot of new guys will not even know that our institute used to have COBOL and basic. And examination में प्रोग्राम लिखना पड़ता था. मतलब वो कंपाइल कौन करेगा वो तो पता नहीं, लेकिन प्रोग्राम का कोड लिखना पड़ता था कोबोल में. आई रिमेंबर SADP करके एक सब्जेक्ट होता था. रिमेंबर? हाँ. जब whenever anyone learns programming, उसको बोला जाता है कि you should know logic. Logically you should be strong. But there is a change which is happening, guys. What is happening is, you don't need to know programming or logic or anything. We are telling, instead of data or logic, you will be focusing more on the data. Based on experience and instructions, I will not give instruction, I will learn it up. A very simple example I may want to give you on machine learning is, I give a formula to you, A plus B is equal to C. Just imagine. Now, it basically means every time A is given, B is given, the answer should be C. Okay? Who told this? I. Do I know everything? Maybe yes, maybe no. Instead of that, what if I have last 3-year data of A, last 3-year data of B, and the system himself or herself or itself goes into the data and see A is there, B is there, और इसका आंसर क्या आया? C. So it learns from that. Now you may think machines can learn. Actually they can learn. You need to understand there is one very interesting test of whether artificial intelligence is there or not. This is called when a machine mimic a human and you are not able to find out whether you are talking to a machine or human, then it has passed the AI test, artificial intelligence test. And that exactly happened. You try doing one very interesting thing. If you have Alexa at home or on your phone, tell Alexa, like they have now Hindi support. So Alexa ko bole, Alexa tu mar ja. You know what will Alexa say back to you? Alexa will say, Are shub shub bolo. Try it out. Now why I'm trying to say is there is a kind of a machine which is mimicking humans. Otherwise, it should say, I don't understand what you're telling. Like, remember that MS-DOS was there, bad command or file name. It should say something like that. It doesn't say that. It says, Shub Shub Bolo. What is happening is, it's trying to, traditional problem solving used to be, you define the logic, कि ये logic होना चाहिए, ये programming किया, data यहाँ से लेना है, results आ गया. Machine learning is different. It says, this is the data set, this is how it has happened. Learn the model, ki how they are doing it. A pattern will be there. And you see the pattern and the programming will be done by what? Machine. So I have a question for you. Can machine do programming, friends? Yes or no? No, right? Sir, बताइए हाँ या ना? Like, I know lunch is due, but you can participate. Like, even if you say something, we'll participate, right? So, क्या बोलते हैं? They can. Okay, अगर आपको लगता है नहीं करता है, तो मैं आपको एक सिंपल सा बोलता हूँ. We are all chartered accountant and we love one thing apart from our family. एक चीज को हम बहुत प्यार करते हैं, एक्सेल, है ना? एक्सेल में आपने कभी मैक्रो प्ले किया? What happens when you do macro? You basically record a macro, and programming is written by whom? In Visual Basic, backend will write the program itself. आपको कुछ करने की जरूरत नहीं होती है, आप कभी भी चेक करना हो देख लेना. So it is not some rocket science. It is called CASE, Computer Assisted Software Engineering. So that is one of the reason engineers are not in as much demand they were at one point of time, because now machines can write their own codes. अब वही टेक्नोलॉजी we write it here. ये डेटा है, this is the logic, write the code, this is how it is to be there, and they are able to do that amazingly well. And the result of this is here. We take feature extraction. I'll explain you the example how people are using it. Feature extraction का मतलब है simple कि इस डेटा से मुझे क्या knowledge मिलता है. I read the data, from the data what knowledge I can get, that is called feature extraction, and based on that I write the machine learning code and I just take it up there. This is the future of programming, this is the future of low code, no code, and this is what we call is the future of artificial intelligence, because machine learning is really amazingly good. And अगर आपको इसके बारे में थोड़ा सा भी मतलब पता है तो I do remember around 5-10 years back there used to be one software called Dragon Naturally Speak. एक आता था कि you just say something, it will type it. और हम लोगों ने सबने वो डाउनलोड किया, ट्राई किया और एरर आते थे. Today, have you tried it in Word? It is such a good thing. You just say, it types the whole thing. I'm actually writing a book on audit analytics, and I'm actually dictating many of the chapters out there. And you'll be shocked to know one very interesting thing. It's getting recorded, so I'll tell you. Okay, anyway, I put it in that book also. I am writing one chapter which is not written by me. It is written by a machine using an algorithm called GPT-3. आप Google कर सकते हैं. Algorithm का नाम है GPT-3. So that algorithm is writing the whole article for me. I am not writing that thing. So one chapter is being written by the thing. I am just giving कि ये headings होनी चाहिए, and it is going right here. So we are actually living in a very advanced world. Now, there is an explosion of data everywhere. I don't know if you know, today we have forgotten the art of taking notes. We take photographs. One photograph will be 2 GB in size, right? You know, there is one app in your mobile phone, Android especially, FileGo, Google ने बनाया था. वो सिर्फ इंडिया के लिए बनाया था. क्योंकि आपने देखा हमारा व्हाट्सएप पे कितना जय श्री कृष्णा कितना आता है, मतलब मॉर्निंग एवरीवन विल से, द फैमिली ग्रुप में देखा कितना, हाँ, एंड दैट डेटा विल बी देयर, फोटोग्राफ्स इज देयर. पीपल थिंक अरे ये तो फ्री में है तो चलो, बट देयर इज अ कॉस्ट टू एवरीथिंग, राइट? समवन इज स्टोरिंग दिस डेटा, देयर इज अ हार्ड डिस्क कॉस्ट एंड एवरीथिंग व्हिच इज देयर. But we are actually exploring in data. One of the site I would request you to go is data.gov.in. It's a very, you will understand the impact of data in our life. Anyone has heard this? I always give this example. Have you heard about a profession called actuarians? And how many of you were told when you were doing CA कि along with CA actuarian करो बहुत पैसा कमाओगे? नहीं बोला था, मेरे को बोला गया था. फिर मैंने गया वहाँ पे इंस्टीट्यूट पर, वो इंस्टीट्यूट अच्छा नहीं लगा तो I just left it. So actuarian used to be a profession who will actually predict all these things earlier. And they will have like insurance policy का value क्या होगा, कितना मुझे provision करना है. All these things used to be given by whom? Actuarian. You go to data.gov.in, you will be shocked to know. I would say, what Debjyoti sir says is the right thing. As India, we are actually more advanced in terms of sharing data with, our citizens. IRDA has posted all the claim data of health insurance policy by removing the names and policy number out there, which means last 6 years of all insurance policy claim for health is there on that site. If you are an academic, like I have an IIM Bangalore ID, I get free of cost, or you can pay some nominal cost and buy that data. You know what you can do based on that data, friends? You can say how much provision you are going to make it up on your this time, because इसमें बता है कि अगर आप कोलकाता से हैं, Maybe major issues will be, I don't know, heart, cardiac issues. If I'm from Bangalore, Bangalore is the asthma capital of India. The maximum asthma claims are there. If you are from Kerala, so maximum of my claims are coming is on liver related ailment. The per capita consumption of alcohol is very high in Kerala. Now data never lies. You need to understand there is a term which is becoming very famous. Data is the new oil. Now that is a great thing. Now the question which I want to ask all the CAs and forensic professionals is, do you want to become the refinery of the data? You have to become the refinery of data. You have to think of that is a crude data which is coming up. Can you come and make sure that you get insights from this data which can be used? Second thing is this one. This slide took me a little more time to make because I have tried to put all the open source technology which is available here. This is, I call it up, democratization of technology. मैं आपको एक example देता हूँ. And I'm not belittling any software or anything, but there is to be a solution called SAS. आपने सुना है SAS करके एक company है. It's there in our CA Institute material also. SAS is one of the big company which makes data science softwares. If I have to implement a data science solution on SAS, an average price would be 1 to 2 crore. Okay, and can you see one small dot there, KNIME, K-N-I-M-E? You can go to knime.org. I would highly recommend you to go to that. Knime.org is actually a solution by a university from Switzerland. It's called Constant Information Miner. This is totally open source and it can do 100% of whatever you guys are doing it out there and at a zero cost. Now this is the new power. See, I actually I'm a very stingy chartered accountant. I don't give tip also, but I donate to 2 charities. One is Akshay Patra, which is for the food for kids. Second is Linux Foundation. You should go to the site of Linux Foundation. A lot of men and women are working free of cost to make this software out there. And these are open source. You can just take in, use it, work it out. I remember long ago when I was in Goldman Sachs, we used to have a solution called ACL. Okay, it used to cost maybe 1.25 lakhs as one license fee and all thing, and it used to be a good tool. But today you have all this technology which actually allows you to deal with large volume of data, unstructured data, and most importantly, external data set. Third party risk management. I want to validate this vendor is actually real vendor or fake vendor. Can I actually go and check it up on GST database whether this vendor exists or not? I have now policies to do that. You have seen NESL presentation. It was amazing. I just took a picture of that one. That information that you can get data or information, amazing analysis you guys can do it. Just think of that. You have dealing with real-time analysis. I would highly recommend you, I don't know, I can show it to you that how many of you heard about log mining, process mining? This is kind of an amazing solution which we can actually use on our day-to-day activity. And all these things lead us to a kind of architecture. It's an illustrative thing. You can see this. It actually tells you how simple this architecture is. Can you see this 4 or 5 items I have put it out there? First, application. What are the technology you are using? What are the tools like KNIME? This is a kind of illustrative one. I just wanted to show it to you. It may look technical to you, but let me tell you guys, if you show it to any of the person who's a kind of a software engineer, say this is the simplest structure which I'm seeing it up there. And this structure can be used on all this area. Now let me just go one by one on few of this one and take care of that. Accounts payable. Accounts payable is one area which is a big problem for everyone. Now imagine if I can take, I'll give you the source also, master data and transaction data of all the vendors, okay, and try to plot it up on an Excel that this is the master data, this address is there, this is the PAN number, this is this number, email ID. Now when I plot all these things, can I get access from data like Dun and Bradstreet and GST and data and all this kind of thing? I'll put all of that thing. What we do is, we use it for machine learning. Like there is an organization which has more than 300,000, which is 3 lakh vendors. They want to know who are suspicious, because vendors are all over the country and all over the world, they are supplying to them. And they suspect some of the vendors are fake. So they actually did it that 3 lakh vendors, you can't validate it up. So they use a concept of machine learning. How do they use in forensic accounting? The concept was very easy. They put 50 parameters about one thing. Let's say, for example, if I'm doing 2 crore rupees business with you, do you think my account email ID will be gmail.com or it will be on my company name at least? It should be at least company name, because that's the standard you are expecting if you are a 2 crore, 3 crores POs I'm issuing to you, right? When we see all of that things, friends, you basically understand that there are some parameters are there. And then you give it to the senior auditors and say, hey, from your perspective, tell me out of this first 100 line item, which one looks suspicious to you? Not fraud, suspicious. Now, do you know there is something called as gut feeling? We see some data, you get a gut feeling, ki ye thoda sa something is okay, this is something is wrong. And you try to basically analyze it out there. Those information can give you insight on that. And then you run it on the complete data set. That is the concept of machine learning. You are making the machine learn how an auditor is actually looking at it. And the best thing about that is humans can see data in 2 or 3 dimensions. Machine can see the same data in n dimension. It doesn't mind to have to worry about that. So it gives you a more powerful thing than that. Prediction of customer default. In fact, this was done by an FMCG company, because every dealer who's going to go default, before that it will show some pattern. The pattern is irregular purchases. Second, they are using the complete credit. Third, payment is delayed. Like that, if you see the patterns, can we predict which account is going to become bad debts? And we use a concept called confidence score. How much was confidence? I mean, like 50%, 60% confidence also you are getting it. It's an amazing thing which is there. Spend analytics. This is an interesting area, guys. You should read about that, because in forensic people are using it. Spend analytics is what is your spend happening across different units of work. For one of the large conglomerate, we found that their Philippines office was the most costliest office compared to even London and New York. How is it possible? The reason was there was something anomaly going up. We call it as a behavioral analysis. Imagine you have a company here in Kolkata and has the headquarter out here. It has a subsidiary in, I'm just giving an example, in Sri Lanka. Imagine you found some patterns, behavioral patterns. First, suddenly the sales has increased 30%. Second, data has also increased 50%. Third, 2 people have resigned from accounts department. Fourth, you find that the sales returns has increased. Fifth, you find that there is no space in the warehouse. All these 5 things, are they telling you something is funny, something funny is happening in that organization, at that subsidiaries? That exactly is the way we are looking at that. A behavioral thing, just like a human analyze it and take care of that. Banking, NPA. Now, NPAs have a pattern. And this pattern can be actually done where people can actually predict non-performing assets. And as I told you, Basel III norms itself says that you should use AI in credit management and all things. So it will be again based on the pattern. The past pattern, what happened, we can actually try to predict the future. Okay? And the last one is my favorite, and I will try to show you an example of this also. Can we get the laptop here on the top? The last one is my favorite area. It is called T&E expenditure. Travel and entertainment expenditure, right? Now, tell me one thing. Do you think any auditor worth his salt will spend time on T&E expenditure, 500 rupees ka voucher, 1000 rupees ka voucher, anyone is going to spend time on that? No. But if you get something which is like a intelligent CCN or thing, I'm just showing you something which is done on a Concur database. Okay. So this is actually on I think we have to, they're putting it up. So Concur is a tool which is used for T&E expenditure. And this is the best example of continuously checking all the, we call it anomaly detection or fraud transactions which are happening out there. I'll tell you what happened after that. This is for an FMCG company, we wanted to do a POC, but this is an example, so it's not the data, it's an illustrative example. What happened was, they don't have time to check all this kind of transactions which is there. And humanly, it is impossible to check it up. They have a lot of international transactions and all that kind of thing. So what they did is, they said, this is our SOP. One of the thing in SOP is, junior employee incurring more than senior employee. Like if there are people who are coming to Kolkata, 300 people came to Kolkata from this company, and someone is incurring more than the senior employee's average. Then it calls for it's not a fraud, it calls for analysis on that, okay. Second one is, if you see variances which are there. Variances is in terms of, see, there is a kind of a association rule mining, which is a kind of a concept in what we call it as machine learning. In association rule mining, what do we do? If I come to Kolkata, I have spent money on my flight tickets, taxi, hotel, food, these other things. I will try to see all the transactions which are happening and see a pattern where I am seeing some kind of issues. And it will not be done by humans. It will be a funnel approach. You put 100 transactions out there, only the one which has an issue will come it up. And I'll just quickly show you how it looks like. These are like international travel. It says this conveyance points are issues. Or you may think that there are variances which is happening. You can see this one out here. Multiple analysis can be done on the data. So that's something we should understand, friends. And the last part I want to discuss about very quickly is, it's not that this area is as of now safe. There are challenges. Who are creating the systems, guys? Humans. What is the problem with humans? Humans are biased, right? And we get biased very quickly. Now, there is an issue which is there is, you need to have a proper business understanding. You need to have a proper understanding in terms of data, preparation, model. The domain knowledge of that business is very important. What we are trying to do in machine learning is we are putting a human brain into the machine. So the human brain has to be perfect. If the human brain is not perfect, it will back bias. I'll give you one final example. In California, they did a very interesting machine learning concept. What they did is, they said every crime which has happened in different areas will take the geotag, which location it has happened. And if there are more crime happening in one area, that area we will send what we call it as the patrol car in the night. And patrol car jo police ki hai, agar light on hai, the chances of crime goes down. So with a very funfair, they launched this up, and the computer will tell the patrol car, go into this location, go into this location. They started going it up. After 3 months, they actually stopped that thing, because what they found is 90% of the patrol cars were going only in the black neighborhood, not in the white neighborhood. Even if the crime is more in the white neighborhood, they are going in black neighborhood. It's like the algorithm has become racist. It is becoming racist out there. So they did an audit of the complete algorithm, and they found it a very high weightage was given to black neighborhood. That was a kind of thing. It's ultimately the weightage, if you give very high, it's going to have that. They changed the whole thing up. Now, I don't know if you know, there is an association of algorithmic auditing. It's in Chicago, and they are now auditing the algorithms out here. And the whole idea is to basically start using it, friends. Everything, like if you want to use a tool, I told you the tool, nime.org. If you want to get the knowledge base, it is there in ostuo.oi. Even smallest problem statement which you have in your office, you can actually start using it, and this is going to be a game changer. So to summarize, friends, in forensic accounting, we need to understand, even if we use FAIS, it's 410, it talks about how you use data and other technology in any of your investigations. The main idea is there is a technology which is now available to everyone. Each one of us has access to this. It's all the matter of how we think of this, use it, and take it forward. Thank you very much.
Thank you so much, sir. Obviously, I don't understand I wish for one human being it was possible to know everything, but thank God for experts and sessions like these that we keep learning. I request CA Vasudev Agarwal to please go for, to thank the speakers and take the session forward.
So, we can take only one question if anyone has. So it is already late. I thank you all of you for participating in this conference, and thanks to all the learned speakers who have joined this conference from on the subject excellently. Thank you all of you for sparing your time out of your busy schedule and educating our members here. Thank you all of you. I would like to extend my thanks to the attending delegates who spared the time out of their busy schedule and making this conference grand success. A huge round of applause for the learned speakers and audience. Thank you all of you. And it is already late. I request all of you to please join the lunch, and we will reassemble at 3 o'clock sharp for debate. Thank you all of you. Sir, we'll take care of your stuff. Thank you, sir. Thank you, sir. Thank you, sir. No question, only by